नमस्ते इन्वेस्टर्स। लगभग एक साल पहले साइंटिफिक इन्वेस्टिंग एंड स्मार्टसिंग इन्वेस्टमेंट एडवाइजरी ने अपने मेंबर्स को कोलैबोरेट करके एक बहुत इंटरेस्टिंग इंडस्ट्री दैट इज अफोर्डेबल हाउसिंग फाइनेंस के ऊपर प्रेजेंट करा था, जिसमें उन्होंने समझाया था कि कैसे आप ये इंडस्ट्री को समझ सकते हैं, इसमें क्या फ्यूचर टेलविंड्स प्ले आउट हो रहे हैं एंड कौन सी कंपनीज है इस पर्टिकुलर इंडस्ट्री में एंड हाउ टू इवैल्यूएट देम। So although this was a very exhaustive session and एक paid webinar था, but we believe that since although during that particular time ये sector काफी under penetrated था and काफी less discussed था. So now is because this particular sector में काफी ज़्यादा steam भी आ रहा है, so it makes sense to make this webinar public to our community and give them a gist of the services that both Mission Smile under Smart Sync Services and Scientific Investing provides to the members. So I hope you will like this session. And if you do, then you can become a part of Mission Smile membership as well as scientific investing.
A very good morning to all of you and welcome to this super session study on affordable housing finance sector webinar. And I'm very excited to have Saurabh Bhai with us. And we all know Saurabh Bhai and scientific investing. He has been doing some great work both in the field of fundamental and technicals, and also he's made some algorithms which has helped a lot to the investing community. Many of you must be following him already on Twitter, and I am really happy and excited that he has agreed to do this session together. So we at Mission Smile had covered this sector briefly in the last year, I think sometime in the month of October. But that was more of an overview. Today, it will be a much more holistic exercise where we are going to pretty much deep dive on the whole sector, and we'll look at it from different angles. And that is where Saurabh Bhai would be much more needed. So that is why we have teamed up today, and it's going to be a marathon session. More than 100 slides are there. So what we'll do, every 30 minutes, we'll take a 5-minute break so that if any of you have any questions, you can keep typing them on the chat box. Every 30 minutes, we'll take up those questions so that you don't feel monotonous, right? And from time to time, we'll switch slides. Some slides will be taken by Saurabh Bhai and some by me. So with this, Saurabh Bhai, over to you. I'll keep my video off so that you can continue, and I'll join once my slide comes in.
Sure. So thanks, Ankit Bhai. Thanks for the opportunity, and it is great to work together. To all of you, Ankit Bhai and me, we have been working together, brainstorming on multiple ideas. And I think after he came to Bangalore, this frequency has increased for all the good reasons. Whether it is rate gain or it's Apcotex or it's Aavas, we keep discussing these stocks, and that is where we thought, okay, let's collaborate and let's do one session together. And that is where we thought affordable housing finance could be the right one, right, to look at it. So thanks, Ankit Bhai. Thanks again for the warm introduction and looking forward to it. Let us start. So standard disclaimers. So Ankit Bhai, do you want to highlight the disclaimer from your side?
Sure, Saurabh Bhai. So it is very obvious to know that I am and my company is interested in a few of the stocks which are going to be mentioned, and don't take it as a recommendation. There would be a few stocks which we have mentioned to our clients, recommended to our clients to hold and buy. I personally am also holding one of the stocks in my portfolio. So take that into account that some biasness will be there in our analysis, but don't take it as a recommendation to buy or sell. Yeah.
Thanks, Ankit Bhai. Disclosure from my side. So I'm Kumar Saurabh. I'm a SEBI registered research analyst. And out of all the stocks which we are going to discuss, there is one stock, Aavas Financiers, in which I'm invested. I have built this position in the last 3 months. Usually my style to invest in multiple tranches. I have purchased the first tranche, and that is the reason I started studying the sector and the stocks. So again, please take all this content in order to gain knowledge about the company, about the sector. But beyond that, please do your own due diligence and own research and take your own call. Nothing we are presenting is a buy or sell recommendation. So coming to housing finance sector, anybody who has been in the market post 2019, if you can just comment or raise hand or put in chat, anybody who has been in the market after 2019, was not present before 2019 in the market. Okay, Samveg is there, Chintan is there. So basically this housing finance has a very interesting history just before the 2019. And we will go through it because there is always a lot to learn from history. History helps us to know the mistakes which we should not do in future. So please note that whatever we are telling or whatever we are showing, the idea is not to put somebody in bad light or good light. We are just trying to highlight how market cycle works, and we all are humans. We all do right decisions. As investors, sometimes we go wrong. So please take all this in the positive spirit. But there was a time before 2019 when housing finance industry, it was a darling industry. I mean, if you go to the 2017 market and try to study, जैसे अभी वो चल रहा है ना कि defense is a rocket, railways is a rocket. So there was a time when housing finance was a rocket industry. And I'm just giving you some snapshots from 2017 history, where how everybody was bullish. Some interviews are there of promoters of the companies who are bullish on housing finance, some big investors who were bullish on housing finance. So some of the companies were termed as lakh crore ki kahani, that the market cap will go to lakh crore. So much is the runway, so much is the potential. Also, some of the companies which were there in developer finance, they also got into housing finance, looking at the huge opportunity size, telling it's a huge, large, big market. They're not big real players. Some tweet snapshots. So regarding the companies which were active in housing finance, whether it is PNB Housing Finance, whether it is DHFL, whether it is maybe a CanFin, whether it is Piramal Housing Finance through Piramal Group, there was a lot of euphoria. This was 2017. And who was betting on what stocks? So these are some of the names: Piramal Enterprises, PNB Housing Finance, CanFin Homes, DHFL, all of this. Analysis done, promoters highlighting, global investors highlighting, and all of that. But right now, if you see, in fact, I think this webinar, we felt it didn't get that kind of positive return. We don't know in terms of attendance. I don't know why. But also, I see nobody talks about this sector. I mean, a sector which everybody was talking in 2017. Nobody here talks about it, at least in the last 2-3 years, with a lot of optimism. Question is why? And this is what happened after that 2017 euphoria. So I'm just going company by company. PNB Housing peaked at 1,400-1,500 rupee at the end of 2017, and huge drawdown from 1,500 to 114 rupee. Almost 90% money got wiped off. And despite of rising and all, 6-7 years have passed, it is yet to cross the old high. Forget crossing old high. It is still good, more than 50% down from the old high. This was one company, lakh crore ki kahani. The other company, Piramal. So we know that Piramal has got through the demerger and all. So this price is excluding the Piramal Pharma. So actually, if you look in 2017-18, Piramal Industries PEL peaked around 3,000-3,200 rupees. So here you see the peak is around 1,750. That is excluding the effect of the demerger of Piramal Pharma. So another company again peaked at the end of 2017, and from 1,900 went all down to maybe a 350-400 rupee. Again, huge drawdown. Again, yet to cross the old highs, despite of all the demerger and whatnot. The third company, DHFL, it was termed as the cheapest housing finance company available. It was termed as late Rakesh Jhunjhunwala sir stock, bet on housing finance and whatnot. Here, even the worst happened. The whole money got wiped off from 700 rupee to right 7-8 rupee, and then went into NCLT or whatnot, fraud and all, and then I think got acquired by Piramal. So fraud identified and whole money got wiped off. The fourth stock, I think this is the best stock from 2017 of that era, Canfin Homes, from a PSU parentage, fortunately or unfortunately. And this stock, after 7 years, finally it has broken the 2017 highs. And now it has created a new high hovering around this. But the zero return in 7 years after 67% drawdown within 1 year. Now, how many people had guts to hold after a 67% drawdown? And even if somebody was holding, it has basically not beaten the FD return, because in FD you could have met 40% return, 50% return, and then so much of mental pain and still zero return. So this is the history of the last euphoria of housing finance companies and what happened post that. And we all think that we might be small investor, big investors might be great at timing, but at the end we all are humans, and we all get into this bull and bear cycle, greed and euphoria cycle. So the question is what happened, and the idea to learn is so that we don't repeat these kind of mistakes. And these kind of webinars are not only opportunity to learn about the sector or the industry, but also to learn about the mental frameworks of market cycles of greed and fear, so that we don't repeat it. So the question is what happened? Everybody was so bullish about it, and then nothing performed. And I mean, the way it underperformed and the kind of drawdowns we had, the kind of frauds we had, it was something which was not normal. So what happened? So if you look at it, the cheapest stock by book value doesn't exist, and investor money wiped off. So, we all go, okay, lending business, banking, home lending, NBFC. Okay, let's compare on book value. This is costly on book value. This is cheaper on book value. But if you just look at book value, you might get into a company which was a fraud and it might get wiped off. So cheapness by book value doesn't work. Always it doesn't work. Most of the big investors were super bullish, with hardly anyone highlighting the risk. If a sector topped out with 60, 70, 80% kind of drawdown and has not created money for next 6-7 years, something was wrong that time. And I mean, I think most of the accounts, at least big investors, failed to highlight the risk. The lakh crore ki kahani stock is yet to cross its 6-7 year old market cap. Most of the investors have gone through huge drawdowns. None of the statements made by best of the investors came true from investor aspiration. We will see if there is a huge runway, if there is a huge runway, why this happened. But when we hear such kind of euphoria, the expectation is that acha paisa banega. In next 1 to 2 years, good money will be made. But despite of that, 6-7 years, the investor aspirations have not been fulfilled. So if when you have gone through so much of pain after that kind of euphoria, people will be very, very hesitant to talk about that sector. And this could be one reason why nobody talks about it, because it needs a lot of guts to talk about such a sector which has wiped off so much of wealth. वो है ना, दूध का जला छाछ भी फूक फूक कर पीता है. So after what happened in 2017, I wonder if somebody will come forward, because those Twitter messages, everything will get circulated that last time it happened. And it's a typical cycle. When some industry, after so much of bullishness, it goes out of fashion, it remains out of fashion. So why did it happen? Now the question is, why did it happen? And I will try to highlight some examples, what happened and how it happened and why did it happen. Because let's say, even if a next cycle comes, we should be prepared and we should understand. So I'm giving you one company. If you look at this company, from March 2014, 1,885 crore And this is the sales number from one of the business division, which is basically lending based business division. In 4 years, 1885 crore net income becomes 6741 crore net income, almost 3.5 times rise. And then look what has happened. From 6700, we are back to 3300. But if you look at FY 17-18, so in lending business, what are the key metric you look? So whenever you discuss a lending business, because housing finance, affordable housing, these are lending business. So what are the top 2-3 metric you look at when you try to analyze a lending business? Can you mention in the chat? NIM, okay. ROA, okay. CRAR, okay. Cost of fund, cost of borrowing, price to book. So, okay, price to book we use for valuation, NIM we use for P&L, NPS we look at it, ROA, ROE, the golden indicators of a good lending business, right? ROA and ROE. If you look at this company was generating good NIM, 7.2%, 7.7%. This company was generating very good ROE, 18.2%, 18.3%, very good ROA, 2.1%, 2.2%. It is said that in lending business, we are getting a business above 12, 13% return on equity, more than 1.5% ROA. This is a great business. So it looks like a very good business. Somebody said NPAs. If you look at the NPAs, little high gross NPA, but at a net level after all the provisioning, 0.6, 0.7%, which looks decent. So everything looks good. Provision cover 87%, 81%. So everything is looking good. Loan to value on the book just 45%. That means they're not lending too much. Then why did this happen? That is the question. Any idea what company is this? ALM, yeah, we will discuss about ALM also. DHFL, PEL, Canfin, no, not so far. No. So I'll give you one hint. This person was like quite popular that time in 2016-17 era. Okay, we'll see which company is this. This is what happened. You just go 2 years forward and this is what happened. If you look at the NIMs have fallen. If you look at the ROA, from 2% plus ROA, we have gone to 0.4% ROA, 0.1% ROA. The 18% ROE went to 3.2%, 0.7%. And when you look at the gross and net NPAs, your 0.7% NPA almost tripled to 1.97%. So, we get excited by, okay, cheap price to book value, great ROA, great ROE, all these numbers. And this is what happens within 1 to 2 years. So first lesson, these sectors are very, very complicated sectors. It's not that easy just by looking at numbers. There are many, and though we are talking about housing finance, if I can take the whole lending business, I see so much of euphoria and so much of chest thumping on quarterly result. The banking and lending world is very, very different. It's very, very difficult and complicated. What can come 2 years down the line, we can't even imagine. So the question is, how do we be aware of it? And that is where we will try to focus. Numbers are outcome. There are things behind which drives those numbers. And how to understand those things, that is where we will try to focus. So now another hint is there. Within 1 to 2 years, this company went from best to worst. So think about the lending based companies in 2017, which were darling of market in 17 and then almost gave up everything. Any idea? No, not ILFS, not PNB Housing, not India Bulls Housing. Okay, I will give you one more hint. So this gentleman who used to run this business, thanks, Rohit. It is Edelweiss.
Yeah, so I think somebody else also mentioned Edelweiss before Rohit.
Oh, sorry, I missed it. I'm sorry, I missed it.
Yeah, I also missed it earlier.
Chanchal, yeah, Chanchal.
Yes.
Okay. So I was an investor in Edelweiss, so I have my own lessons. Luckily, I didn't lose money, but I purchased this stock at 98 rupee. This stock went to 330 rupee. I thought I am the king. I know everything. There was a great blog also written by one of the investors I respect a lot. Everything looked good until things turned bad. And in no time, the stock went back from 320 to whatever it is right now. Luckily, I could exit at break even just because my entry price was low. And I still remember, I think that I did that purchase during demonetization. It was trading at 98 rupee. From 130, it fell down to 98 rupee. So after 60% drawdown, didn't respect. That was the time I realized how important is technical analysis and all of that. So this stock was Edelweiss. If I take you to the con calls, when things started changing in Edelweiss, after all the euphoria, great numbers, 3 years of excellent performance and all, people were asking, tell me about your book. Which are the developer loans you have given, whom you have lent, who are your top borrowers and all. So if you see these questions, can you give details of your top builder exposure in the wholesale mortgage book so that it will give some light? So they told that we cannot give the names and all. They didn't give the names. They told like any industry player, we are also going through hard times, but we can't give names and all. Then they were asking give the geographical breakdown and all. So they told that they have almost top 10 builders, top 10 lenders, 35 to 40%. But all it took, this is what it takes 1 year to go from best to worst. If some of your loans go bad, that is how dangerous the leverage game is. And the management, I mean, written text is different, but if you go and listen that con call, I still remember the kind of, I had never seen the promoter, stammering like he stammered while replying some of the questions. I mean, it was obvious that, something bad has happened. And then, of course, managements, they try to give the best story, but we know what has happened to that stock. After that, it could never recover. And this is how the book value of the company moved from 3 to book value to 0.5. So the whole wipe off of the book value valuation itself happened because the numbers went from good to bad. We will try to learn why it happened and all through more use cases. This is another use case. This is another company which was related to housing, either developer finance, either retail housing, home loan and all. Here, if you see, this company in 2014 did a revenue of 1120 crore, which grew to almost 7500 crore, 7 times in 5 years. And then after 4 years, it is yet to cross that limit. Everything looked good till 2019 March. The GNPA is below 0.5%. The NNPA is 0.38%. Very good 21% ROE. Very good return on asset. Any idea which company is this now? Yeah, Chanchal, thanks. Good. First ball chakka Kondal. It's PNB Housing Finance. Now, what happened in PNB Housing Finance within 1 year, if you see, and I'm not taking COVID. It's not COVID which resulted. Even if you see December 19, your 0.38% NNPA shoots to 1.25%, which is almost a 3x jump. Your GNPA shoots from 0.48% to 1.75%. And if you take those 10-20 days of COVID, then this is like all double. So what happened within 1 year from here to here? All the companies, why all the companies in a sector within 1 year are going from the best number to the worst number? I'll give you some hint of what was happening. And PNB HFL is interesting. Again, we don't have any kind of positive or negative biases against a company, against a promoter, against a management. We are just trying to highlight what has happened by trying to triangulate the data, by trying to bring all this research work so that you are better prepared to handle the situation. Now, there is a book called The Unreal State. Anybody who has read this book, The Unreal State? I'll just name. If you are interested in housing finance, real estate, developer finance, it's a great book to read. The Unreal State. Anyone who has read this book? It's a beautiful book written on the Indian real estate market by one of the CEOs of one of the real estate companies. And actually, luckily, the timing of the book was really good. I think the book came somewhere around 2015-16, and he has defined the whole cycle, what was happening in the real estate market. So what I am highlighting here is some of my lessons. I make notes whenever I read a book. So I just collected those lessons because it's very, very important to understand what happened in 2017. The story actually started in 2014 itself. So what happened? The core banks, the banks like the HDFCs and SBIs and ICICIs, they understood that the real estate market cycle after 7-8 years of bull run, it has stopped and things are going bad on ground. And they stopped lending to a lot of builders in 2014. Then what happened? Once the builders started defaulting on bank loans, they approached the NBFCs who were lending at 18-20% rate. And those defaulting with NBFCs went for PE deals and private lenders. So this is how this cycle moved. So if you see a very high NIM and all those things, very high yield, it was for this reason. And this is where the high growth came, because in one go you are releasing so much of developer loan and you are showing. See, lending is always a game of, future. Lending is easy, collecting is difficult. Showing high PNL growth rate is easy. Recovering that money with good NPA numbers 2, 3, 4 years down the line, when your book is seasoning. When I say the book is seized, means if I get a loan, maybe from day one, I will not pay my principal and interest. Maybe there could be 1 year of moratorium, 2 year of moratorium. Now, PNL might look great for some timing, but once that payment starts and the pain starts, then the real performance comes into picture. So basically, it was a risky lending being done, which was resulting in a very, very high growth initially. And it's not like nobody highlighted. There were reports from Ambit Capital, and I like to read, at least those days, I love to read a lot of Ambit Capital reports. On dairy sector, I remember the report was very good, and it was not always positive. They also had negative reports. So Ambit in its 2015 real estate report had highlighted this potential what will happen. But because it was such a bull market, all the NBFCs, housing finance companies were doing well, growth numbers were coming. And that is why I'm telling, in banking and lending, when people get excited about quarterly PNL growth rate, I mean, I just don't know what to say. So that was happening. And that is why in 2016-17, nobody cared about it. But he's saying for us, by the end of 2014, it was clear that the conventional model of real estate development has run its course. And it's not a retrospective book, which is talking in 2020. I think I read this book in 2018 and the book was written somewhere in 2016, before all this happened. So this is what was happening. The other thing I want to highlight with respect to this housing finance company, they were retail buyers of housing projects who did FIR against some of the developer companies, but not only the developer companies, but also the housing finance companies who supported these kind of projects. How many of you have heard about the 80-20 schemes and all? Have you heard about this 80-20 scheme? Yeah, Sushil Kumar Sanyal, I think he was CEO of one of the companies from Airtel Group, Bharti Group company. Have you heard about this 80-20 scheme? Neil has said. So basically, this is one of the real estate schemes where they will tell, come, you pay only 20% money in 3 years, you will double your money, you sell your property to us, you go, you double your money and all of that. But see the kind of leverage which is getting created, see the kind of PNL growth rate which is being created. And a lot of housing finance companies participated in the developer projects which were around these kind of schemes. And that is why you will see this kind of mammoth revenue growth rate which happened, and then it backfired, because when the cycle turned and the real estate companies, either they were not able to sell, they were not able to develop, and then your whole GST and demonetization, all of that happened. Then the retail buyers, they got stuck in these schemes because they never wanted to purchase house. They wanted to double the money, and the whole vicious cycle played out. So the quality of growth, how it is coming, is very, very important. The quality of fund which is being deployed, the yield, how it is being deployed. So if you see, this was not a sustainable yield. The banks had already rejected. This kind of home finance lending was not a sustainable lending. So that is why ROA, ROE, these are outcomes. ये सबको inflate करना बहुत easy है. The real research happens in how these numbers are getting generated. And again, today, when we will analyze these companies, we will again highlight that why we should keep focus here. But this is how I will tell you, I was lucky. I was not intelligent or smart. I was just lucky because I did one bad real estate investment. The builder used to be one of the best builder, and even that went through the cycle. But because I was hunting for house, I was aware what was happening on ground in the market. So all these schemes, this PNB, HFL, how they're growing, I was aware of all of that. We had a group in Bangalore, and I remember we had a lot of intense discussion because Carlyle was one of the top investors in PNB, FHL, and the first argument which came was, are they idiots doing it, and all of that. But ultimately, this is how it played out, just because and that is why in banking, the on-ground, or in lending, in home finance, the on-ground knowledge is very, very important, because that will decipher what is driving the growth and what is driving the ROE and what is driving the ROA. I don't know, it has been banned. I think NHB, National Housing Board, they took cognizance of what was going on. There were cases done. I don't know if it has been formally banned. I don't think so, but I think they came up with some kind of paper that how to handle these kind of things, and then RERA got created. So now it's not that easy to do because of RERA, and then again RERA is again subjective. There are states which are following RERA in spirit, and there are states which are not following it. There is a stark difference between the execution of RERA between states, but those states which are doing it well, it is not that easy to do, because you have to create SPV. There is a separate account where the money has to go, the money has to be spent on the construction activity and all of that. So I'm not totally aware of the technicalities, but yeah, things have become difficult. The other thing is the big builders, the builders with good reputation, they are snatching away market share. So all of that is happening for good, but then it's a slow process. It will happen over a period of time. This company, from 6 book value at this kind of mammoth growth rate, went to less than 1.5 times book value, and now again it trades at 1 book value. So book value based valuations can go for toss. Great ROA can go for toss. Great ROE can go for toss. So you have to understand how the growth is coming, how the ROA is coming, how the ROE is coming. That is the real research. And then you have to identify where good pockets of good quality of growth is, where good quality of ROA is, where good quality of ROE is. Can we really trust this book value? Once you become sure of that, then only looking at these numbers makes sense. Else these numbers can look good one year and it can become worst another year. The other thing which was there, if you looked at the valuation of all these companies, 6 book value, 3 book value, all of that. So again, valuation also in the euphoria, when there is a euphoria that, again, ये तो next decade का sector है. Like last year, specialty chemical was next decade का sector. Now all the defense has become next decade ka sector. But whenever you get this next decade ka sector where everybody is like, and prices are flying, your margin of safety as an investor decreases. And same happened with, so it's not like all the companies were bad. If you see Canfin, though the prices have come to the same level, Canfin didn't blow up. Canfin still maintained, and given you had GST, demonetization, COVID, whatever, I will show you numbers. Canfin still, and despite of being a PSU, 8 years of number cannot lie. Still, it has been decent. The problem was the valuations were such, and the growth, of course, the growth was such that the moment growth tapered, the valuation tapered, and then no returns have been made. So accidents happen when there is all around euphoria with all possible rewards baked in valuation, and returns happen when most of the possible risks are baked in valuation. So I have always said, for me, valuation is very, very important. Even keeping all this bubble aside, there was an element of overvaluation also, which was there. So now let's get into, I know the first 30 minutes were very scary. You have come to understand about companies and I have scared you enough. But the whole idea is to prepare you to handle the unexpected, because these are very, very complicated sectors. अगर आज आपको कॉस्टली लगता है, मे बी अगर यहाँ से 30% गिर जाए आपको शायद चीप लगने लगे. But whenever you are investing, or let's say momentum comes, we all love momentum nowadays. So we will start loving the stocks, but I just want you to be prepared how to handle and how to think about these sectors by walking you through the history, that don't rely on those numbers. And we will put a framework of what should be done before looking at those numbers. And that is what we are going to do. But before that, I think because the whole Mission Smile and scientific investing community is here, some of you would have asked that if we can focus on some of the technical jargons, how it works, because not everybody understands those technical jargons of stage 1, 2, 3 DPD, this, that. So we will spend some time on understanding how the lending business works and some of those technical jargons, and then we will shift to the companies and the whole affordable housing. But I'll just take a pause. Any questions so far, or are we good?
So if anyone has any questions, you can type in on the chat box, or you can just raise your hand. One question which was asked by Dilip has been very well answered by Ayan. So any other question, we can take that up. We have 5 minutes and then we'll go back to the presentation. You can probably raise your hand or just type in the chat box and we'll allow you to ask your question. Okay, so as of now, I don't see any. So Saurabh bhai, I think 4-5 slides you can continue. Yeah. Ocha, Amar has raised his hand. So let me.
Yeah, Aman, go ahead.
Ask to unmute. Okay. Amar.
Yeah, Ankit, you guys can hear me?
Yeah.
Saurabh and Ankit, one question. One of the reason why housing finance might have taken hit is because जैसे सौरभ भाई ने एक मुहावरा किया था, तो मैं भी एक मुहावरा यूज करता हूँ, बहती गंगा में सब हाथ धोते हैं, राइट? So now is there a specific need for housing finance company? Because now every bank, be it PSU or private, they have their own unit for specifically catering to the housing finance, right? So is that case of too many players and kind of the pie being distributed, which kind of hits the profitability and all?
Yeah. So
one, yeah, Ankit bhai, go ahead.
Okay, thanks. So ऐसा नहीं है कि हाउसिंग फाइनेंस कंपनी का कोई रिक्वायरमेंट नहीं है. So there are different and we'll cover more in detail in the subsequent slides. Each company is different in some ways. So if you look at the major housing finance companies, the big guys like the HDFC and PNB, they cater to a different segment. And the affordable housing finance companies, which we'll be talking now, they cater to a completely different, I don't want to get into detail now because we'll cover them in the subsequent slide. The main point is, the reason why Saurabh bhai highlighted all these risks is that even for affordable housing finance companies, even though today those risks are not playing out, but we should be mindful that कुछ लोग ऐसे होंगे affordable housing finance में. In fact, we believe there are a few players in quest for growth. They are sacrificing the asset quality, and that is what we have to. And the patterns get repeated in all lending cycles, across all lending institutions, right? It's not just related to housing finance. And when we have a history with us, which Saurabh bhai very beautifully explained till now, that there has been incident when जो आपने बोला कि बहती गंगा में सब हाथ धोए, affordable housing finance में भी ऐसा हो सकता है. And just because we don't have any history in affordable housing finance, we should not be complacent, and we should be looking forward for all these this thing कि ये वापस वहां पे कहीं रिपीट हो चाहिए. That is the purpose of. ऐसा नहीं है कि housing finance company is not relevant. It is relevant. इंडिया में अभी भी अगर आप पॉपुलेशन देखो और लोगों के पास कितने घर है और उसके सामने में कितनी हाउसिंग फाइनेंस लोन है, and when you compare it with the Western world, we are nowhere close. So if you even listen to the con calls of all the housing finance, affordable housing finance companies, they'll say that there is no dearth of growth. अंडर पेनिट्रेशन है, बट इट इज नॉट इजी. लोगों को लगता है कि जस्ट बिकॉज, खास करके इन्वेस्टर्स को ऐसा लगता है कि ग्रोथ है तो मतलब कोई भी आके चालू कर देगा और एवरीबॉडी विल ग्रो. दैट इज नॉट गोइंग टू हैपन, एंड विल कवर दैट इन डिटेल. सौरभ भाई, इफ यू वांट टू ऐड एनीथिंग देयर.
No, I think anyway we have a lot of slides to cover, but just example, if you see salaried versus non-salaried, there is a huge difference between spread. The non-salaried spread is 3 times. So there is a different market for everybody, and we will cover in detail how there is a market. But the basic criteria of, aggressive growth and those bubble cycles and all, that is human behavior of even managements that keeps on happening. Of course, again, it's not a high entry barrier industry. So yeah, it's competition wise, it's very intensive, and that is where somebody chasing hyper growth goes through these kind of cycles. So as I said, a lot of companies blew up in 2017, but they were companies done well also. At business wise they have done well, price wise mein fir wo valuation wo sab aa jata hai.
Right. So we'll take one more question, and baki jo log bhi reh jayenge, we'll take that in the next Q&A session. So I'll unmute I think Abhishek Singh. So Abhishek Singh, I have unmuted you. You can ask your question.
Yeah, hi Ankit bhai and Saurabh bhai. So just a quick question, right? Like, we are talking about the whole affordable segment, but my question is, the whole real estate trend, what people are focusing on is mostly in the smart cities, or maybe like because I'm based in Hyderabad and we recently bought a house. So what we preferred is to basically go with a bank where we are already banking out with from past 10 years, which is ICICI. So we never thought about like jumping left or right, because we trust the bank. And the price segment also, what you look at, like maybe that matters. I'm not very sure about the whole thing, what we're going to talk about in the near-term slides. But the question what is coming out in my head is, where exactly are these affordable segment housing companies focused on? Like, is it
Abhishek, and to everybody, just one request. Most of the questions, I think what you are asking will be covered in the presentation.
Okay.
So what we have discussed, my suggestion would be, let's keep the questions around what has been discussed, so that if there is any confusion, we'll clear. Because all this we are going to discuss in very much detail.
Okay. Sure.
Because what happens now, we may not be the sample size of that business model. So we will see. Because India is, different sample sizes coming together.
Okay, sure thing. I'll stay put.
Yeah.
Thanks, Abhishek. So Saurabh, you can continue now.
Yeah. So I'll just spend 10 minutes on how lending works and what are the terms and all of that, so that everybody is on same page when we will be using a lot of those jargons to compare companies and all of that. So lending business, it's very simple. On one side, you take money. On the other side, you give money. So you take money at certain rate and you give money at certain rate. In between, there's a spread, and you manage that whole show in between that spread, right from operational expenses to provision to NPA, and finally you generate profit. So if we take an example, and this is valid for any lending company, including home finance, it's just that how the money will be raised, that will be different, and where it will be given as a loan will be different. In housing finance, it will be for home loan. In auto finance, it will be to buy a car. Bank can take deposits. A housing finance can borrow from the bank. That is the only difference. But there will be a side of cost of deposit, and there will be a side of lending. So let us say this company has taken 90 rupee deposit and 10 rupee equity, and total liability is 100, and the cost of deposit taken is 6%, and there is a 9:1 leverage, and it is using this money to lend, maybe to for housing loan at 12% interest rate. So taking money at 6% and giving loan at 12%. Now home loan given is rupee 100. I'm just simplifying it. Of course, there's a RBI, and there are limits how much you can lend, how much you have to put with, a lot of things will be there, but I'm just explaining how this works. So home loan given is rupee 100. Now, because the loan has been given on 12%, the interest earned, which goes in the PNL as net income, that is rupees 12. So the net income, the sales in the P&L is rupees 12. And interest expenses, how much money is being paid to raise this money. So on this 90 rupees, 6%. So 5.4 rupees is the interest expense. So the net and the other expense. So because you will have to pay for the employees, you will have to pay for the office and whatever. So your operating expenses are 3 rupees. And by business mandate, all the companies, they need to provision for NPAs because there is no business which can recover all the money. Some money will go bad. So companies, they do some kind of provision that, okay, I think maybe I'll provision 1 rupee, assuming that it will become NPA, so that I am safe and I don't get a shock in my P&L statement pad. So some provisioning they do for the NPA. So let us say this company did a 1 rupee provisioning for the NPA. So what you get, I am just removing depreciation, all of that for simplicity. So you earn 12 rupees. This went to your depositors. This went as expense. This went for provisioning, and it's an accounting. P&L is in accounting. So you are left with 12 minus 5.4 minus 3 minus 1. 2.6 becomes your profit before tax. And then now the jargons come. What is your interest spread? So your interest spread is basically 2 minus 1. 2 minus 1 is basically your 12% minus 6%. 6% is your spread. Your net interest margin is 3 minus 4. 3 minus 4 divided by total assets. Your cost to income ratio is how much cost you are spending for generating the income. So your core operations expenses, number 5, expenses divided by 3 minus 4. This is the interest earned minus interest expensed. Your credit cost is the provisioning, which is number 6 divided by loan given. Your NPA is the loan which has not been paid. It's not here, but some loan which will not be paid. And basically, gross NPA is when from the date of schedule, if the loan is not paid for 90 days, then on 91st day, it becomes GNPA. So that becomes your gross NPA if the amount is not paid for 90 days. Net NPA is that gross NPA minus whatever provisioning you have already done, because that is gross NPA and you are already doing some provisioning. So net, your gross value minus this 6 becomes your net NPA. And provision coverage is your number 6 divided by gross NPA. Your return on asset is your profit divided by total asset. So in your total asset, your liability side, your debt, equity, everything is there. But if you have to just find your return on equity, then profit by shareholders' equity. Few more terms. So what is DPD? DPD is day past due. That means from the day of payment, if you are not making payment, so it will say 1 day DPD, 2 DPD. How many days have passed since you had to do your payment? That is DPD. And when this DPD reaches 30, 60, 90, these are buckets of DPDs. So gross NPA happens when you don't pay for 90 days from the scheduled date. But RBI divides into stages, stage 1, stage 2, stage 3, for better tracking and monitoring of how the NPAs are shaping up. Is the funnel contracting? Is the expanding? So any loan which is due up to 30 days from 1 DPD, that is stage 1. Any loan which is overdue between 31 to 89 days, that is stage 2. And any loan which is overdue by more than 90 days, it is stage 3 or gross stage 3. And the amount of money already provisioned in the P&L to factor the non-performing assets, that is called provisioning. And your gross stage 3 minus provisioning becomes your net stage 3 or NNPA. Now, how this provisioning is done, in this also certain changes have happened. And earlier it was provisioning was happening after the losses are getting realized. But then RBI said that you have to build models to expect, to forecast, to predict the credit loss, and then you need to do the provision. Now, again, there is lot, I mean, it's all banking. People who are in banking, they will know. But the idea is depending on the asset class, risk-weighted asset, all of that, historic data, you have to predict the loss and you have to provision in advance. So that is what becomes expected credit loss provisioning. And provisioning is being done in the P&L. But when you realize that you cannot recover this loan, it's like, okay, I am willing to forget it from my books of account. So basically this asset I want to forget. So you write it off from your balance sheet. That is called a write-off. So these are the terms. Any questions?
I think there were a few hands being raised earlier. We can go to them. I think Vinod Chandra was, so I'll just unmute him. Yeah, Vinod ji, you can go ahead.
Yeah, so in earlier, like I had a couple of questions. One is like, as you know, like in the previous cycle, it was like in a failed cycle, we can say, right? So after the top. So what was the like main, it was due to corporate or it was due to retail lending? That is the first question. Second question was like, as you know, like due to the bad quality of the lending, it generally fails, right, and converts into the NPA, and there is the only high spread generally the NBFCs or banks are made. But as you know, like in one of the slide, one of the book which was shown extract, it was mentioned that it is considered as an for lender as an opportunity who were lending at a 36%, and they know that it is supposed to be failed to pay, and they are like in a looking for that to acquire that assets at a distressed price. So should we consider that as an opportunity or it's an risk for the that bad quality lending? These are the two questions on the previous one. Thanks.
Sure. So I'll respond one by one. So whatever happened in that cycle, there were 4 or 5 things actually which happened. One, you saw what we discussed in terms of banks stop lending and then high risk lending. See, higher the yield, more the risk, and better the execution required. So some segment you can lend at 12%, some segment you can lend at 18%, some segment 25%. But the higher you go, the more is the risk, and that is why they are charging a higher rate. So it's all about how the somebody lending in a 12% segment is managing that book, how somebody lending in 20% segment is managing that book. That is one. The second thing which happened at that time was we have not yet spoken about, but when we talk of risk, asset liability mismanagement, so ALM, because these are long tenure loans given and you need to raise money. So there's a tenure in which you have to raise money and you give it to back. If you are taking deposit thinking you'll return in 1 year and you are giving it to loan for 5 years, so how will you do it? So you have to ensure that all the money inflow which is happening in the kind of time window you have to return, and all the money deployment you are doing in terms of lending, they need to match. So asset liability management is an important concept. We will discuss further. Because of ILFS crisis, a lot of things happened around ALM. That is second reason. The third reason are corporate specific reason. So it's not like, mostly it was more around developer finance, the whole thing happened. But if you see DHFL, apart from developer, its books itself were questionable, and that was into retail lending also. One person has typed a question that how we can identify DHFL kind of scenarios. You have to look at what rate they are lending. Go and check at what rate they are lending and what rate they were raising the cost of borrowing. So what was the spread and how did they manage the whole show in that kind of spread? So if something is too good to be true, then how does it work? The other thing is, as I said, these are industries where ground level scuttlebutt matters. You have to see whom are they lending, which developer they are, sponsoring, what is the reputation of that developer and all those things. So it was a mix of multiple things, but is there any questions? I have left it unanswered.
I think you have covered it pretty well, Saurabh bhai.
Okay. There were a few more questions. I'll just go through one by one.
No, I think on the chat we have covered. I have answered.
Covered. Okay.
Okay.
Okay. Okay.
And I hope my screen is visible now.
Yeah, go ahead, please.
Okay. Any question left, Saurabh bhai? Do you see any question? Which
Luxury, and also we are focusing on affordable. There is nothing called luxury housing as such. It's the same HDFCs and banks of the world which will do, but we will focus more around affordable and close to affordable. But see, if you learn the framework, you can apply the same framework and you can analyze, any other housing finance companies.
Great. So
yeah, nothing super important which needs to be addressed right now. Yeah, go ahead. Go ahead.
sure. So thank you, Saurabh bhai. That was a great understanding you have given to all of us regarding what has happened in the housing finance cycle over the last few years. And then you have also briefly covered some of the technical jargons, which is very important for anyone who is looking to invest in a lending sector. Now, before I start with affordable housing finance and why do we want to discuss, I'll just share one important fact is that even though we'll cover in the subsequent slide that affordable housing finance is in many ways different from the normal housing finance business, but we must look at the history of housing finance business because the patterns will again repeat. It will not repeat in the exact way, but it will repeat in some other way. It pays to look at the past history of housing finance and who defaulted and how. So like Saurabh bhai answered to someone who asked about the how to identify players who might default. So we'll cover one such player today where there is no proof as of now, but we are suspicious that probably this is one company which we would be a little more suspicious as to how they are generating that kind of a ROA, which is really different from the other players in the industry. So rather than, so in case of say a manufacturing company or a pharma company or a FMCG company, someone who is producing excellent results, it makes sense to look at them because probably they are doing something different. But in lending, our view is you should be more suspicious towards them because lending is one business where all the problems happen later. सारे जो आपके लोन बुक है वो सब शुरू में बढ़ जाएंगे जो सौरभ भाई ने बहुत अच्छे से कवर भी किया था, and later on you will realize what were the mistakes, and it is very difficult to know in advance कि इसके साथ गलत होगा या उसके साथ. So it is always better to be safe rather than trying to go for the fastest growing player in the industry, right? So with that background, I'll start my presentation on affordable housing finance, right? So how affordable finance is different from normal housing finance? It is different. I still very strongly believe many people don't get it. Many investors don't get the nuances between the normal housing finance and affordable housing finance. Okay, so before that, I'll give you some framework to think about, which is not just related to the affordable housing finance sector, but also in general to thinking about different businesses, right? So just keep that in mind. Don't think it is only related to, you can use that framework in any other investment you feel like, right? So this is about Gillette. Of course, aaj to, shaving is not that much in trend. People are following people like Virat Kohli, who will carry a stubble and all, right? But if you look at the history of Gillette, for 100 years, they didn't have to do anything hard. So basically, they just caught on one wave and they just kept on surfing. Very few businesses in the world are like that. And increasingly, because of technology, because of the change in patterns of how we look at different things in our life, it is all the more difficult to get those kind of businesses where we will get 100-year or 80-year runway, right? However, there are some businesses which are far less cyclical or probably have a far longer runway than the rest of the industry. So like lending itself is a very wide sector, right? उसमें अगर आप banks देखोगे, microfinance देखोगे, there is hyper competition there. And because of that competition, you will see that they are prone to cyclicality. You will see growth for a 3-4 year period, and then you will see that NPA starting shooting up, right? And then again, NPAs will bottom down, or NPAs कम हो जाएंगे और उसके बाद वापस एक नई साइकिल स्टार्ट होगी. But in this whole segment, there are the affordable housing finance is one segment where probably the cycle is much longer. And I'll be honest in saying that मुझे ये नहीं मालूम कि कितना लंबा साइकिल है, बट इतना मालूम है कि ये 2-3 साल 4 साल की स्टोरी नहीं है, क्योंकि ये 2-3 साल में तुरंत में डिमांड कम हो जाएगी या एक साथ में बहुत सारे प्लेयर्स आ जाएंगे. बिकॉज विल कवर इन द सब्सिक्वेंट स्लाइड, इट इज very difficult to start an affordable housing finance company, right? So as I said in the previous slide, this is a very interesting book. You may read it whenever you get time, or even if you don't read it, just try to understand this concept of finite and infinite games. And as you can see, it is defined in the image which I have presented here. So फाइनाइट गेम्स, अगर आप अपने इसको बिजनेस से ये करते हैं, सो लेंडिंग बिजनेसेस में फाइनाइट बिजनेसेस आर दोज बिजनेसेस व्हिच आई एक्सप्लेन, द बैंकिंग एंड द माइक्रो फाइनेंस, वेयर देयर इज कट थ्रोट कंपटीशन. So when there is a cutthroat competition, it will be a finite game, and as defined here, finite game is a game which is played for the purpose of winning, right? 2-3 लोग win करेंगे. जैसे अगर आप banks में देखो तो HDFC and Kotak has been winning for long, but there have been so many other banks which have yet again proved that अच्छे साइकिल में तो अच्छा करते हैं, फिर बाद में NPAs आ जाते हैं, right? This business or this sector which we are talking about, probably I would not say it's an infinite game, but it is far longer and much better than finite, because यहाँ पे you need not have one winner, you may have multiple winners. And when do you have multiple winners in a sector? You will have multiple winners in a sector when there is a long-term tailwind or some industry level positive characteristic in that business. Then only you will have multiple. अगर बैंकिंग में ऐसा होता कि वो मल्टीपल होते हैं या मल्टीपल मतलब उसमें मल्टीपल विनर्स होते, so there are so many banks, PSU banks, private banks, and they have been working for more than 20-25 years. But why we have one HDFC, one Kotak? And even though those HDFC and Kotak, if you look at the last 5-year performance, they have not done anything great, right? So that is the concept we wanted to start with. Now I will ask this question. I think some of you might be knowing. May I know who is this gentleman? Can anyone try? No, he's not Bharat Shah. I'll give you a hint. हम लोग अफोर्डेबल हाउसिंग फाइनेंस की बात कर रहे हैं. He has been the pioneer there. KG Krishnamurthy, no, not Deepak Parikh. This is surprising that people don't know him. No, not Sushil, not Vikram. I'll wait for 5 more seconds, 5-10 seconds.
Those who are there from before 2019-18 must know him.
Not HT Parikh. Okay. No, Kamal, you are wrong. Not PL chairman. Yes, finally we got the right answer. Mr. Choksi, Mr. Sudhin Choksi. And Mr. Sudhin Choksi was the pioneer, and he started the foundation of Groove Finance, which was later on sold to Bandhan Bank. So he started somewhere in the late 80s. And if you go, there is a lot of literature available on the internet itself, freely available. Or the best thing is you can go and read the old annual reports of Group Finance or HDFC when it was there, a subsidiary of HDFC. And you will find the kind of pain he went through, because I'm talking about 80s and 90s when there was no technology. So वो basically अपना खाता लेके जाते थे, and he used to talk to people like कोई पानी पूरी वाला है, कोई धोबी है. There would be people like someone who is basically having a very small shop in a small area and would be earning somewhere around 15,000, 20,000 a month. And there was no formal source of income, as in they don't pay any income tax. They would probably not have even a PAN card. Aadhaar to us samay tha bhi nahi, right? And he used to sit with them, listen to their story, try to understand. And he introduced that system of credit based on cash flows. So he used to understand कि कहाँ से उनके पास पैसे आ रहे हैं, वो पैसे कितने frequently आते हैं, कितने concentrated है, और जनरली कितने लोग आ रहे हैं उसके पास वो सर्विस लेने के लिए, और उस एरिया में उसके जैसा वो कौन करने वाला है. So all these little intricacies he paid attention to, and that is how he started. And because in those days there was no technology and funding also was not, even though HDFC के थे, but उतना ज़्यादा funding इनके पास भी available नहीं थी. So it started very slowly in the 90s, and only post 2002-03 they actually saw tremendous growth. Okay, so that is how the affordable housing finance sector began in the late 80s, then 90s, and then 2000. And even in 2000, hardly people knew about affordable housing finance companies, right? So now let's welcome to the sector. These are the clear tailwind in the affordable housing finance sector. You can clearly see there is low penetration of mortgages. So you can see in India, mortgage to GDP ratio is less than 12%. And if you compare it to any Western countries or any large economy, it is more than 30% for sure. In some it is even more than 50%, right? Second, because it's related to tier 2, tier 3 rural areas where there is very less housing, it is there. Government is there to always push these schemes. Government will come up with incentives, will come up with several schemes, which is good for the borrower also and also for the lender, right? So that is the second one. And the third one is the favorable demographics. So we know as a country, we are still very young, and in the past, we were more of a joint family system, and abhi nuclear family start ho rahi hai. People are staying. So earlier we had 10, 12, 15 members family, or even 30 members family. Nowadays, most of the families are becoming 3, 4, 5 member family, right? So now the demand for housing, not just in places like Bangalore and other cities, but also in the rural areas, it is going to increase multifold, right? Urbanization is again a feature where we know that more and more, अगर आप हम लोग सबको ही अपने कहीं ना कोई गांव से related है. If you have now shifted to a place like Mumbai or Bangalore or Delhi, and now you go back to your hometown and just try to imagine what kind of days you saw when you were young, going to school, and what kind of infrastructure they have. That itself says that the requirement or the need for house is felt by everyone, and it is going under the way, right? And the last one is affordable home finance loans can be securitized as PSL. PSL means primary sector lending, right? So यहाँ पे भी government का incentive रहता है. Now, this is one important slide which I believe we should all pay attention to. So Saurabh bhai mentioned about the normal housing finance companies at the start. This is the major difference between the normal housing finance companies and affordable housing finance company. And if you come across investors or your friends who will say that कि housing finance में ये problem था, ये होता है, इसमें इतना risk है, इसमें इतने competition है, बड़े players ले, बड़े HDFC ले, so you show them this slide, and these are the things which make sure that there is a niche in this sector. हर कोई नहीं कर सकता ये काम, right? So coming to the borrower profile, most of the, जैसे I think someone asked you asked a question, I don't remember the name. He was mentioning about he being in Hyderabad and he bought his and he took loan from ICICI Bank, right? Now probably if he, I don't know who you are, but but I'm sure if you are a salaried person, you would have got loan very easily through ICICI Bank. If you would not be a salaried person, no banks would touch you. It will be increasingly difficult to get a housing loan from a bank. In fact, abhi bhi staying in a place like Bangalore or Mumbai, and even if you are having a decent net worth, a bank will always focus more on the salaried person than on the self-employed. That makes affordable housing finance even more difficult because they mostly target to self-employed people where banks will not go. And most of them do not even have any credit history, right? In terms of geographical focus, you will see that most of them are related to smaller towns, semi-urban areas, outskirts of larger cities, जहाँ पे property prices भी कम होगी, loan amount will come down to 15 lakhs or 10 lakhs or even less than 10 lakhs sometimes, right? Banks के लिए it doesn't make sense to go that way. I'll cover that in detail in the subsequent slides, why it doesn't make sense. And then in case of credit appraisal also, in the normal housing finance, एक set pattern बना हुआ है कि ऐसे 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 करना है, ये process करना है, ये document देना है, ये होगा, उसके बाद ये आना है. Everything is properly documented and decided, and checklist बना हुआ है, based on that it is done. But in case of affordable housing finance, the credit appraisal process involves high level of subjectivity because just to give you an example, कि एक पानी पूरी वाला किस तरह से पैसे बनाता है, एक so mind you, there are some pani puri walas who are making really good amount of money if they are present in a nice place and having a good volume, and they are eligible to affordable housing finance loan, right? So how to compare the credit rating or the credit worthiness of a pani puri wala to a dhobi to a small shopkeeper, these all will be different. So you can't have a set process for that, right? Collection pattern again is very different, right? यहाँ पे maximum लोग ऐसे होते हैं जिन लोग technology savvy नहीं होते हैं. You cannot assume that you can easily have the normal auto debit, ECS or NASH walas. Most of the people will come to your branch and pay the EMI, right? And cost and sources of fund, of course, affordable housing finance may, because you are not a bank, your cost of funds will be higher than a bank, and that is why you will also lend to the borrowers at a higher rate compared to a bank, right? So this is again a very important slide where most of the housing finance companies or affordable housing finance companies cater to new to credit customers, जिसको banks touch भी नहीं करेंगे. Banks के लिए सबसे पहले important होता है, just do this checklist. If you have, I don't know whether if you have not taken a loan at all, just go to a bank and apply for a loan. They will immediately ask you for your credit history, or if they will not ask you directly, they will ask you for some details which will give them a good idea about your credit history. अगर आपकी कोई credit history नहीं है, taking a loan from a bank will be credit history या formal source of earnings नहीं है. Even if you are earning really well, banks will not lend you. That is where again affordable housing finance companies take that risk, go the last mile, ज़्यादा work करते हैं, ज़्यादा मेहनत करते हैं, अंदर तक जाके देखते हैं, and that is why it is far more branch heavy also. So banks can probably do much more business from one branch compared to an affordable housing finance company, right? Now, this again proves that this segment caters to low income housing segment. So आप देख सकते हो यहाँ पे होम लोन की जो ये है 3 lakh, 7 lakh, 10 lakh, 15 lakh. It's on the left side of the slide. So 3 lakh is largely underserved. 7 to 10 lakhs is cooperative banks, RBIs, low and focused HFCs, and 15 lakh के ऊपर जब जाते हैं तब वहां पे large and mid-sized HFC आते हैं. And the companies which we are covering now are all less than 15 lakhs. Okay. And informal होता है, जैसे मैंने आपको पहले बताया था कि they earn in cash, no formal income, no formal residence, salaried भी नहीं है, most of them are self-employed. Now look at the growth. Overall HFCs का growth 10% हुआ है, but look at the mini HFCs, which is the affordable housing finance companies. Look at their growth over the last 5-6 years, pre-COVID I'm talking about. Now this, I believe, is a very good mental model. This mental model basically means that do something which is very, very, very hard to replicate. So I'm sure I'll just ask this question. Do you recognize who is this gentleman? I purposefully not named him in the slide. Can any one of you recognize him? Who is this gentleman? I'm looking at the chat. Great, Ayush, Paul Graham. So I would highly recommend you to go through some of the essays written by Paul Graham, even though his essays were directly mentioned or mostly catering to the startup ecosystem in the US. But there is so much to learn, how to think about businesses, how to think about management, and how to think about execution. And that is where I believe housing finance company, specifically affordable housing finance companies, in the next few slides, I'll prove this point that they are doing what is harder not just for them, much more harder for a bank like HDFC or SBI. And that is why probably they are growing much faster than what most of the investors think they can be, right? So I'm not reading the whole text, but you would have got the gist. He basically says that कि अगर आपके पीछे कोई भाग रहा है, if any bully is after you, you should not run downward, you should run upward. Of course, सीढ़ी ऊपर चढ़ने में आपको भी दिक्कत होगी, but अगर वो पीछे जो भाग रहा है आपके पीछे वो अगर थोड़ा ज्यादा well built है और थोड़ा ये है heavy है, it will be even more harder for him to run upwards, and that is where you can outbeat him. And that is what is happening in the affordable housing finance sector. What they are doing cannot be copied, or it's very, very, very hard. I should not say cannot be copied. It's very, very hard. And incentives भी नहीं है. अगर आप देखोगे कि banks के लिए incentive भी नहीं रहेगा वो सब में जाने का. And I'll tell you how. So what makes affordable home finance niche or running upstairs, as I discussed in the previous slide? सबसे पहले small ticket size. अब बैंकों का लोन का ticket size देखना in general. Even focused housing finance company like HDFC, अब जाके उनका ticket size, average ticket size देखना. Per branch, I'll share that data in the subsequent slide. But per branch कितने का लोन करते हैं वो लोग? कितने उनके employees के सामने per employee लोन कितना होता है? Compared to that, if you look at the size of affordable housing finance, no banks will probably enter this space, and they will have to decrease their efficiency to reach to this level, right? So small ticket size is one. High touch segment मतलब आपको जाके मिलना पड़ेगा, देखना पड़ेगा. It is very, very, very difficult to loan to this segment of the society without knowing them, without doing proper sense of underwriting. And that is why I and Saurabh bhai, we both agree on this. Probably companies which are doing on ground work and meeting their customers and doing all the underwriting under them, they are probably in a much better position in this sector compared to a company which is reliant on a DSA, right? DSA means वो agents होते हैं banks के जो आपको lead लाके देते हैं और वो bank उनको ये करती है. Because the agent, you understand, he would be incentivized to just give you more loan because उसका तो पैसा जितने लोन होंगे उसमें उसको कट मिलेगा. But from a banker's perspective, it is important for you to know the borrower, and that can not happen over a phone call or over email. Email में तो maximum लोग available ही नहीं होंगे यहाँ पे इस segment में. And that is why we believe in terms of looking at businesses across the sector, you should focus more on whether the bank, whether the lender is having that high touch with its borrower or not. Third, self-employed borrowers. मैंने आपको पहले भी बताया था कि most of these are not employed people. They are doing some work of their own. Third or fourth, property is a state subject. So different in the state में different property के rules रहेंगे, different challenges रहेंगे. So that is why also some banks or large HFCs will have this kind of problem, right? New to credit borrowers, I've already covered that, and not a repeat purchase. This is again a peculiarity. Affordable housing finance में जो customers होंगे, वो लोग का एक ही ड्रीम होता है कि कैसे भी करके अपने जिंदगी में अपने फैमिली के लिए एक घर होना चाहिए. So they are not going to give a repeat purchase for you, right? So it is one time only, right? And the last one is balance transfer. This I believe is a very important point. So जैसे हम लोगों ने स्टार्टिंग में बोला था कि the banks will never touch these kind of people because they are, most of them are new to the credit. But जैसे ही affordable housing finance companies इनको credit में ले आते हैं, उनको लोन दे देते हैं और 1 साल या 2 साल गुजर जाता है, where you have a credit history, so banks will come as shark. क्योंकि banks को ऐसे ही चाहिए कि भाई फलाना अफोर्डेबल हाउसिंग फाइनेंस कंपनी ने तो इसका सारा अंडरराइटिंग कर लिया है, ये बंदा 2 साल से सही तरीके से पेमेंट भी कर रहा है, हमको और कुछ नहीं करना है, सीधा उनको टैप करो, जो रेट पे अफोर्डेबल हाउसिंग फाइनेंस दे रही है उससे कम रेट पे अपने को देना. सो दैट इज अ वेरी इंपॉर्टेंट रिस्क or a metric which we should always track. So in most of the HFCs, affordable housing finance companies, as of now, they report somewhere around 5 to 7% of balance transfer. But ये अगर बढ़ने लगा, बढ़ के 10% होता है, 15% होता है, that will be alarming, and that will mean कि जो niche इनका अभी तक है, वो धीरे-धीरे कम हो रहा है. And to be very honest with you, I think over a period of time there is a chance कि वो कम भी होगा. But I think that is still a lot of distance away, right? But this is one thing which we should keep a track on. Now this, I think this slide will थोड़ा सा dated है, इसमें कुछ data हम last year का है. So like the cost of borrowing right now has increased from the current level which we are. In the subsequent slide you will see the current rates, but you will get some gist over here. Look at the cost of borrowing of HDFC and compare it with Aavas, Aptus and Home First, right? Of course, there is no doubt HDFC सबसे सस्ता दे रहा है. Now look at average loan assets per employee. There is no comparison. जहां पे ये 20 करोड़ लोन दे रहा है per employee, वहां पे उनका 0.3, 0.5, 1.3 है, right? Look at the average loan asset per branch. 110 crore in case of HDFC and in single digit in case of Aavas, Aptus and Home First. Similarly, in terms of the efficiency, you can see employee plus other expenses to NII is so high in case of Aavas and Home First, but so low in case of HDFC, right? So what is the main takeaway from this slide? It is a high touch, it is small ticket, it is in-house, and यहाँ पे less business per employee मिलता है. So आप सोचो ना, if you are in the shoes of HDFC, who has that kind of cost of borrowing and that kind of average loan asset per employee, why will they go into this kind of space? They will go only how? Through that balance transfer route. कि कोई आवास का कस्टमर हुआ या एप्टस का कस्टमर हुआ या होम फर्स्ट का कस्टमर हुआ, उनकी क्रेडिट हिस्ट्री बन गई और वहां से उसको पोच कर लिया. That is the only thing which HDFC can do and will do also. So whether Aavas and Aptus and Home First can withstand that, that is something which we have to keep a watch on. So this again, I've taken up from a book called Scale. I'm forgetting the name of the author. His last name is West. And he mentioned a very important thing over here. कि अगर आप देख लो ये जो elephant आपको दिख रहा है is like an HDFC, and the mouse which you are seeing is like any other affordable housing finance company. But if you look at the chart, ऐसा नहीं है कि सिर्फ माउस के लिए ये है इंडस्ट्री है. There are sections in the industry which is still available and up for grabs for HDFC, and there is a large section of the society which is, or section of the industry which is available for mouses like Aavas, Aptus and this. So ऐसा नहीं है कि elephant grow नहीं हो सकता है या mouse बहुत fast grow होगा. Mouse will have its own journey, and same is the journey of elephant. And the best part which people don't realize is that in most of the cases they will not intersect or एक दूसरे से टकराएंगे नहीं, at least in the initial stage. And that is the beauty of this sector. Okay, so I'll start, we'll deep dive on Aavas before Saurabh bhai takes over. So if you have any question, we can take up maybe 1 or 2 questions. You can raise your hand if you have any question. Yeah, Aman, go ahead.
Hello, am I audible?
Yeah, if you can be a little louder, that would be better.
Yes, my question is, as you mentioned, it's a state property and government का भी काफी focus रहता है और ये first time borrowers के होता है. My question is that जैसे जो भी गवर्नमेंट स्टेट लेवल पे बहुत सारी स्कीम्स देती है कि हम आपके लिए 1 BHK हाउस बना के दे रहे हैं, 2 BHK हाउस बना, तो वो इनके लिए इन हाउसिंग फाइनेंस कंपनी के लिए मतलब सपोर्टिव होता है या इनके अगेंस्ट रहता है? जो गवर्नमेंट हाउस बना के दे रही है फ्री में, फ्री में ही देती है वो 1 BHK 2 BHK लोअर सेक्शन सोसाइटी के, तो उनको ये वाली कंपनीज लोन देती हैं या फिर गवर्नमेंट उनको फ्री में दे देती है? तो वो गवर्नमेंट के जो ये स्कीम्स है वो इनकी अगेंस्ट जाती है इन कंपनीज के या इनके लिए सपोर्टिव हो गया उल्टे फैक्टर?
Sure, Aman. So if I got your question correctly, you are saying कि गवर्नमेंट की जो स्कीम्स है जहाँ पे वो फ्री में भी घर देते हैं या बहुत ही सब्सिडाइज्ड वैल्यू में देते हैं, that is always a pro policy for someone like an affordable housing finance company, because that basically increases the aspiration in the minds of the borrowers or the customers. कि अरे वाह, मेरे को मतलब आज से 10 साल पहले 20 साल पहले घर के लिए कोई सोच नहीं सकता था उस एरिया में, उस काइंड ऑफ इनकम लेवल पे, जो आज लोग सोचने लगे हैं. एंड देयर आर डिफरेंट काइंड्स ऑफ स्कीम्स. सबको फ्री में नहीं मिलता है, मैक्सिमम लोगों को सब्सिडाइज्ड रेट में मिलता है एंड इंटरेस्ट की सब्सिडी मिलती है. So that is a very good win-win for both the borrowers and also for the housing finance companies. Okay, so we'll go to Sunrise Financial Service. I am unmuting you. Yeah.
Yeah, hi Ankit, this is Kamal Gupta. I'm from Saurabh's group, right? So जैसे हम बोल रहे हैं अभी ये माउस है, right? But now the banks are doing co-lending with small financiers, IFL Finance, Ugro Capital, सारे co-lending के साथ आ रहे हैं, right? 80% बैंक देगा, 20% हम लोग हैंडल करेंगे, and they are approaching the customer directly, direct to direct, as banks could not do that, as you mentioned earlier.
Can you be a bit louder? आपकी आवाज ठीक से नहीं आ रही है.
Just hold on. Am I audible now?
Yeah, now it is much better. Yeah, go ahead.
So मैं आपको ये कह रहा था भी आजकल जैसे co-lending चला हुआ है, HDFCs, ICICI are now means tying up with Ugros and IFL Finance, right? जिनका मतलब rural और small towns में बहुत ज़्यादा presence है. They are increasing it, right? So how will these impact these small housing companies, affordable housing companies? The future में मतलब how will these impact? It may be covered in future slides. Don't know. If it is covered, then I will be okay.
Yeah, we'll briefly cover this in the subsequent slide, but since you have asked, I'll just briefly touch upon it. So, see, co-lending is a practice which has already begun. And so one of the affordable housing finance company, which is Home First, which has already started co-lending with some banks. But again, this is a very, very new phenomenon. and it's very difficult to ascertain how it will phase up, it will shape up. Plus, co-lending में भी अगर आप ध्यान से देखो, so the thing which is rare is that bank needs these affordable housing finance companies to partner with them. So ऐसा नहीं है कि co-lending में बैंक जाके किसी और के साथ चली जाएगी, आएगी तो इन्हीं के पास, which is again a good thing for them, right?
Yeah.
So that is it as of now. But of course, we'll have to keep a watch. And one risk is always there, which I said in the past as well, कि अगर they have to keep on maintaining, और जिसको बोलते हैं ना अपने कस्टमर्स को संभाल के रखना पड़ेगा, वो शिफ्ट होने का चांस बहुत रहा है. अभी तक 5 to 7% पे लिमिटेड है. They have done a decent job, but there is a big risk of that shifting because affordable housing finance company cannot match the rates of a something like an HDFC, right? So that is a risk.
एक क्वेश्चन मेरा एक्चुअली मैंने पहले भी 2 बार हाथ खड़ा किया था, जो पुरानी स्लाइड थी. इफ यू हैव टाइम कैन आई आस्क राइट नाउ, और नहीं तो बाद में पूछो, अर्जेंट नहीं.
Sorry,
एक क्वेश्चन मेरा और था, एक्चुअली मैंने पहले भी 2 बार हाथ खड़ा किया था. कैन आई आस्क राइट नाउ, और बाद में भी पूछ सकता हूं, ऐसा कुछ अर्जेंट नहीं.
I think we can take questions from someone else now, and
Okay,
you can
fine,
probably write it in the chat box, or maybe next time जब अपने करेंगे तब कर लेंगे.
ठीक है. ओके,
Thank you.
थैंक यू.
Yeah, Vinod, I think this we can take the last question before we go ahead with this.
सो अंकित जी, जैसे आपने बताया कि HDFC का कॉस्ट ऑफ बोरोइंग बहुत ही कम है कंपेयर टू दी अदर्स, and they can use this balance transfer as their strategy, right? So for them, it's in a long way. They currently lending to the high profile or a high credit score customers, and if they still have money left, they can use this balance transfer to acquire the next level of the customers, right? So my question is that why we should invest in a affordable housing, although they have some long way to grow compared to the maybe lesser than the HDFC, but why we should invest in a affordable housing rather than the normal housing company if their return on equity is just a nominal difference. Let's say affordable housing might be having a 20% ROE, and maybe HDFC is having a 18% ROE, right? But the risk just for the 2% of the ROE, do you think like it's in a worth, like, or what is the basis we should keep our decision on the investment? That is the question.
So Vinod, I think we'll cover this question in the subsequent slide, but I'll just slightly touch upon it. First of all, the ROE is not that great, and we'll cover that also. In the housing finance company, ROE is in the range of 12 to 15% only. And there is a reason for that. I'll cover that also in the slide. But the main part of an affordable housing finance company is the sustainability of growth. If you look at the past, they have grown upward of 30%. Even at somewhere around 14,000 crore AUM, Aavas is still growing upward of 20%. That makes it more exciting, and the quality of growth and the quality of asset. And it's a seasoned book. Aavas started this book in 2010. So they've seen all those demon, then IL&FS crisis, then COVID, and all those things, right? So that is where if after seeing those shocks, even after that, if they are growing consistently without compromising on the asset quality, that gives you an indication that probably this is one sector which is far more underpenetrated, and that is where competitive intensity is far lesser than the other lending sectors. That is why there is a sustainability of growth, and that is why if you look at their valuation, we'll cover that towards the end of the presentation, why their valuation is pretty high compared to all the other lending institutes. Okay, so I'll stop here. We can take the questions in the next break, and I'll start with the deep dive on Aavas. So this is just in one snapshot. You can see right now in the last 10 years, they have already in one way, they are always thinking 5 years ahead, and they are always thinking of disrupting what their previous style of investing. So even if you go to their con calls in the recent con call Q1 FY24 wala, you would have seen after a long time their disbursement took a hit. But there was a reason why the disbursement was low compared to last year, because they are now shifting to Salesforce. I'm sure many of you know about Salesforce, which is a IT application company, which basically is the engine behind so many MNC companies all around the world. So they are, and Home First already uses the application of Salesforce. Aavas has just started on migrating to that, and that has led to a little fall in the disbursement in the last quarter. That tells you about the DNA of the company. They are always thinking for the future. They are always thinking 5 years ahead. So if you look at Aavas 1.0, which is there on the left hand side, it had only one CXO. They had only 178 crores of asset under AUM, only 18 crore of revenue, and only 25 branch. Look at Aavas 2.0. There they had more than, as in they had 4 CXOs. Look at the growth in AUM. So the first 5 years, you can see they were basically they were just laying the building blocks, and just look at the growth after that. 180 AUM se seedha 2,700 AUM, right? And the same thing happened in the number of branches and revenue as well. And now they're starting their journey of Aavas 3.0, where you can see how big the company is. So if you go to the previous con calls in FY21, FY22, FY23, most of the analysts in the con calls used to ask a repeated question that now you have reached a stage, how you will grow from here. So when they were in 5,000 crore revenue, 5,000 crore AUM, even then analysts would think that 5,000 crore ho gaya, abhi yahan se growth possible nahi. 7,000, 8,000 mein bhi yahi puchte the, 10,000 crore mein bhi yahi hote the. Today they have reached close to 15,000 crore, right? So that is how they have been consistently growing, and they are growing with a very clear mindset of doing two things right. One is being more and more techno savvy. Okay, we'll cover technology, especially in one slide, to give you a flavor as to what they are doing on that side. And the other thing is they still focus a lot on people. So they are, if you look at compare their employees with all the other affordable housing finance, they have the largest number of employees, and not just in terms of number, they have the largest number of CAs in there, and all their credit writing is almost 100% is owned by themselves. So it is completely in-house, right? And they focus a lot on opening new branches. So एक तरफ technology पे भी focus है, क्योंकि technology can help them in much better ways. And ट्रेडिशनल काम जो बहुत इंपॉर्टेंट है एक अफोर्डेबल हाउसिंग फाइनेंस कंपनीज के लिए, कि अच्छे लोग हो जो सही तरीके से अंडरराइटिंग कर सके, एंड देन लॉट्स ऑफ ब्रांचेस, बिकॉज देयर आर सो मेनी एरियाज इन इंडिया इवन टुडे वेयर देयर इज dearth of housing finance loan, specifically if you go to tier 3, tier 4 and rural areas, right? Again, a question, can anybody guess who is this gentleman? Wow, that was really quick. Mahavir, you are right. So it's Nick Sleep. So I'm sure many of you must be aware of who Nick Sleep is. If you are not, I will highly recommend just type on Google Nick Sleep letters. And those are a treasure trove and a must read for any investor, whether you follow his philosophy or not, but you will learn a great deal out of it. In fact, there is a book also called Richer, Wiser, Happier, where there is a chapter on Nick Sleep and his partner, Zakaria. So, but this webinar is not on NextLeap. This webinar is on one concept which we learned from NextLeap, which is very much applicable in a company like Aavas Financiers. So in his letters, he mentions something called scale economics shared. And he invested long back when nobody was even looking at Amazon. I'm talking about 2003-4, and you will find that in his letters, how he looked at Amazon, how he looked at Costco at that time. And they had similar patterns where there was high untapped potential for the company to raise prices, but they chose not to raise price. Rather, they chose to lower the price. And why they chose to lower the price? They wanted to share their benefits, whatever benefits they are earning from the business. They wanted to share that benefit with their customer. Why? Because if you share your benefit with the customer in the form of further lower prices, there is a very high possibility that you will get a sticky customer. They will keep coming back and they will spread the word around. Let's see, this is what is happening. Now, and just look around yourself. कितने लोग book जाके book store में खरीदते हैं? And forget about book. Amazon just started with books, right? Look at so many purchases we do on a daily basis at our home through Amazon, right? That is where very few business owners have that kind of vision. And we'll cover in the subsequent slide how what Aavas is doing in terms of scale economics shared is not being done by the other players. And that is what makes Aavas a much better and much higher quality lender and a responsible lender compared to others in the industry. Right? I have not read the whole text, which is always there for you on the internet. And I'm sure many of you would be aware of scale economics shared already. So this is how it works. Lower prices, limited SKUs, high volumes. Then in case of, just try to understand this from affordable housing finance or say Aavas businesses. They also have lower prices in terms of lower interest rate for loan. And I'll show that in the subsequent slide, how they have lowered the interest rate along the way when they started reducing their cost of borrowing. Limited SQ, उसके पास एक ही काम है, housing loan, as in 70% of their business is from housing loan, right? And high volumes, when you keep on doing that on a scale basis, you will have higher utilization of assets. यहाँ पे assets क्या है? Employees, branches, उनके basis पे आपका operating leverage will kick in, which will lead to more profit, which will lead to better balance sheet size, balance sheet strength, which will lead to further credit rating improvement, which will eventually lead to lowering of borrowing cost. So lowering of borrowing cost will mean again you have a buffer with you, and which you will pass it on to your borrowers in the form of lower interest rate, right? And it is very clearly mentioned in their annual reports. I have just picked it up from their annual reports, financing with lower rates, and they have made it very clear कि कैसे करना है. Again, I'm not going to read the whole text and make it boring for you. What they are saying is the same thing which I said in the previous slide, कि जैसे जैसे उनके cost of borrowing कम होंगे, they will keep on passing it on to their customer, and they will have the same spread. They will never go for maximizing spread, right? That is their forte, and till now they have stuck to it. So if you ask me, I think that is a key monitorable in case of Aavas. जहां वो स्प्रेड को ऊपर नीचे करने चालू करते हैं, मान लीजिए अगर ज्यादा ऊपर कर रहे हैं, means they are becoming greedy. If they make it lower, that means probably the competitive intensity is going down. So that I personally feel spread of Aavas, spread means the difference between cost of borrowing and the rate at which they are lending, right? वो एक ही 5.5 के रेंज में उनका, in the last 8-10 years it has been like that. See this slide, you can see over here on the left side, credit rating in 2012 was BBBB plus. In 2022 it came to AA-. Cost of fund भी आप देख लो, जहां 12.3 था वो 6.88 आ गया था FY22 में. Of course FY23 में if you see, it has gone up a little because of the RBI का जो बीच में rate hike हुआ था, right? Lending rate भी वैसे ही गिरा है. They started with lending rate of somewhere around 18 in FY14. Look how it has come down to 12.65. And 12.65 से अगर आप इधर ये right side वाले image में देखोगे, in FY23, when their cost of borrowing has risen from 6.88 to 7.61, उतना ही raise उन्होंने cost of as in yields में भी किया है, right? And just look at this last bar chart, which is spreads. Look at the spreads in terms of FY16, 17, 18, 19, 20. It has always in the same range, right? So this is what you should understand, because see, lending is a business जहाँ पे because of RBI policy, because of the economic factors, there will be changes in rates. Interest rates कम भी होंगे, interest rate बढ़ेंगे भी. But how the company is reacting to it, how it is passing on to the customer, how much it is passing on to the customer, and how the customer is reacting to that. All these three parts are important, right? Now look at this. Aptus has not passed on. Aptus का आप देखो 17.2 में FY20 में था और आज भी 17.2 में ही है, right? And look at their cost of borrowing, 9.8 से गिर के 8.3 तक आ गया, and that is why you can see their spread has increased from 7.5 to 8.85. So जहां एक बंदा 5% के स्प्रेड पे काम कर रहा है, दूसरा बंदा 9 के स्प्रेड पे काम कर रहा है. Just imagine, right? Look at Home First. Even there is the same story. In FY19, their spread was 4%. It is consistently rising. But to be fair with them, as of now, they have not increased their spread to a very alarming level. I personally feel that probably as they also mature and they are also growing fast, they will also probably not increase the spread beyond this. So they have also kind of in the last 2 years have come to the band of 5.5%, 6%. I'll be more worried if they reach to 6.5 and 7. But this is something which you can again watch in terms of Home First, what they are going to do, right? But in case of Aptus, I think this is my personal view. I may be wrong, but I think these things are very alarming. And you should ask this question: whom are they lending at 17.2%? What are their borrowing profiles? What are the borrowers' profile? Who are these borrowers? कैसे वो पे कर रहे हैं? And plus, mind you, this is not just, they are not just into housing finance. मैं next slide में आपको cover करूंगा. In case of Aptus, a significant portion of their book is also into the non-housing segment, which is an MSME NBFC of them, right? So that is also one of the reasons why the yield is so high in case of Aptus. Now that book or that business is completely different from the housing loan business. So that again, in my opinion, is a risk. Even though right now the numbers look optically very good in terms of the NIMs, in terms of the spreads, and that will percolate into ROA and ROE also, which we'll cover later. But you should very well understand the risk behind a business like Aptus over here, because Aptus is not only into the housing finance, which an Aavas or Home First is. They have a sizable portion of the book, which we'll cover now. You will get to know. So now we'll compare, even though we are covering Aavas in detail, but we'll have a decent enough peer comparison to give you a clear understanding how Aavas is similar to Aptus and Home First and where they are different. So in all the three cases, these are the similarity. Management is seasoned. Most of them are first generation entrepreneurs. They all use technology. Probably Home First is the most tech savvy of all three, but Aavas is also picking up there. They have also improved a lot in terms of technology in the last 5 years. Prior to last 5 years, they were not so tech savvy. Lending specifically to self-occupied is in the case of Aptus and Aavas, but in case of Home First, there is a lot of loan given to salaried people as well. No investment property. That is very important. No developer loans. So as Saurabh bhai mentioned at the start, what all problems happened in the housing finance companies, majority of them were related to developer loans. Even if you had a very good retail book where you did mistake or the blunders, the big blunders happened in case of developer loans. A very good example in front of us is Piramal. You can see their con calls even today and the results when they come up and tell, even though their retail business is probably doing much better now and picking up, 2018 के पहले का जो पाप किया हुआ था डेवलपर साइड में, they are still paying for that. That is how difficult or how risky that developer loan business is. And that is where, again, this is another monitoring point for all of us. कि अगर ये लोग डेवलपर लोन में घुसने लगे, that also will give you an indication कि कहीं ना कहीं इनकी existing business में वो growth नहीं आ रही है या competition बढ़ रहा है, and that is why they have to go into that. So these are all clues which we should keep in mind when to get out of this business. Don't get married to a business or a promoter or something. You should always be a very open when you are an investor, even though you invest for a long term, but you can't just buy and forget, right? So these are some little subtle points which we should always keep in mind. Another important point, zero CP exposure. And I again get reminded of the Piramal example here now. No offense to Piramal management, but you go and check their CP exposure prior to COVID, right? And look at their CP exposure today. And why CP exposure? So there is a very clear case of understanding that CP means you get funding for a short tenure. And what are these guys doing? They are funding long tenure assets. So there is a clear case of asset liability mismatch. And just for people who probably don't understand this asset liability mismatch, I'll just explain it briefly. आप ऐसे simple समझो, आप लोन ले रहे हो किसी से जिसको आपको हर साल पेमेंट करना है, और आप लोन दे रहे हो जहां पे आपका पेमेंट मिलेगा, जो कस्टमर को आप लोन दे रहे हो जहां पे आपको पेमेंट मिलने वाला है 30 साल तक में या 20 साल में या 25 साल तक में, राइट? नॉर्मली होम लोन 20, 25, 30 साल के होते हैं, राइट? तो आप सोचो आपके पास हमेशा एसेट लायबिलिटी मिसमैच रहेगा, क्योंकि आपके यू विल ऑलवेज हैव फंड्स टू पे टू योर creditors, and you will always be short of funds which you are going to receive from your customers. How will you manage that? And that was one of the biggest problem people like Edelweiss and Piramal faced in the previous cycle, where they got lured into very low rate of CP exposure. They kept on buying, taking those CP exposures, and kept on giving loan long term for housing finance people, even to developers, at a rate which they should not have been doing. And that is where the ALM problems happened. That is not happening as of now in these companies. You go and check all their balance sheet and their annual reports. You will find very clear chart of ALM positive in all time brackets, not just next 1 year, 2 year, 3 year, but आप next 5 years, 7 years का भी देखोगे तो ये तीनों की कंपनी में आपको वो मिलेगा. So this is another area which you should understand कि ALM is very important, which will not show up in the P&L, which will not show up in the EPS growth or revenue growth, which will probably not even show up directly in the balance sheet also. But you have to go to the notes to the accounts. You have to look at the annual report. You have to look at the disclosures on the presentation and then understand how it is going. In fact, I'll give you a homework. Go to August 2018 Piramal presentation. They didn't disclose their ALM properly. उन्होंने सीधा next up to 5 years का या up to 3 years का ALM दिया था. Next 6 months, next 1 year, next 2 years का दिया ही नहीं था, because they were in a very, very, very bad state. So this is again a clue. If a housing finance company or an affordable housing finance company is not giving those kind of disclosures in ALM, they are hiding 1 year or 2 years. Again, I'm not calling them fraud. I'm calling them, I'm just saying that they are in a pain and they don't want to don't want investors to look at those pain, and that is why they hide those things, right? Piramal is no more hiding those things today. You go to their Piramal's PPT today, it will have everything from 6 months to 1 year to all the ALM discussed, because उन लोग ने पहले देख चुके हैं or they have learned from that mistake. But these guys can also get prone to, you never know how they get incentivized to change these systems. So these simple metrics you should keep in mind: CP exposure, diversified funding sources, ALM mix, as in ALM positivity, and no developer loan. These are very important points, right? So now let's just look at the comparison in terms of size, in terms of business model, in terms of branch network. As you can see, Aavas book is far more seasoned because they had scaled up even prior to the ILFS crisis or demon. They had a sizable book even then. But when you look at Aptus and Home First Finance, most of their book, in fact, more than 50% or 60% of their book has been built in the last 3 to 4 years. So mostly post-COVID. So you should be far more cautious on these businesses. I'm not saying they are bad businesses. They are also doing pretty well. But you should be very cautious because यहाँ पे book season नहीं हुआ है. And lending में seasoned book is very important, right? So I would say you should be, in terms of, if you like all the 3 companies, my thumb rule would be probably you should be able to overpay, or you should be pay up for Aavas compared to the other 2 companies because of this one factor, and then the rest of the factor will cover as we go along. Okay. The business model, mostly in-house execution, 60% self-employed. In-house execution Aptus में भी है, 70% self-employed है. But Home First में change. Home First में क्या होता है? There comes, they are technology based. उनको leads मिलती है बहुत अच्छे से उनके agents के through, and they use those leads to convert them into customers. So वहाँ पे execution का style पूरा different है, and that is how you will see that in terms of branches also. इसीलिए Home First के branches बहुत कम है compared to Aptus and Aavas, right? So अगर आप simple Home First और Aptus को compare करो, somebody might be having this question: why Aptus having so many branches and Home First so less? This is the main reason. Home First is tech oriented, and इनके में non-housing finance book उतना बड़ा नहीं है जितना Aptus में है, and that is why that is the difference, right? Now in terms of the asset side में अगर आप देखोगे तो all these 3 businesses looks pretty well. एक ही सेट पे है, बट अगर आप देखोगे Aptus का थोड़ा सा हाई है in terms of GNPA and NNPA, and this is something which I believe is something we should always keep a track, because Aptus मेरे हिसाब से, and even Saurabh bhai के हिसाब से, we were discussing it over the last few weeks when we were making this presentation. Probably they are catering to a segment which is far more risky, and that is why their lending rate is also 17.15. Part of it is because of high risk borrower, and also because of high proportion of non-housing finance loan. Okay, so keep that in mind. Debt to equity is surprising when you look at affordable housing finance, and you should actually question this. In fact, I will rather question this to all of you. You look at HDFC, you look at ICICI Bank, you look at any housing finance companies, large housing finance companies, they all have debt to equity in the range of 6 to 7 to somewhere around even 10. Can anyone tell why debt to equity ratio in Aavas, Aptus and Home First is so less? This is a question to the audience. Anyone wants to try? I'll just wait for 10-15 seconds. I don't see any answer. Low ticket size. No, low ticket size doesn't make any difference. RBI norms. Part of it is RBI norms, I agree. Yeah, but not the right answer which I'm looking for. High borrowing costs. Again, partly right, but not the main reason. Good one. Ticket size is low. Part of the repayment will finance. ROE is as good as cost of funds. No. Balance sheet strengthening. Kshitij, you are pretty close balance sheet strengthening. I'll tell you the reason about that. Diversified and significant customer of no Aman. So I think good try, and most of you are very close to the right answer. So I'll now come to the answer. If you look at any bank or any large housing finance companies, I'll give you example. HDFC is one large, PNB Housing Finance is one large. All these large housing finance companies have a bank parentage. Like even in case of Canfin, there is Canara Bank, right? Where जिसको बोलते हैं ना आपके ऊपर एक बिग डैडी है आपको सपोर्ट करने के लिए, या in case of PSUs you have the government to support you in case of times like COVID. And because the section of the society they are catering to are far more vulnerable to these economic shocks, it is prudent for a player like Aavas, Aptus or Home First to have a sizable equity, because कल को अगर वो ऐसा कुछ सिस्टम वापस, सो कोविड बहुत जल्दी आया और निकल गया, उतना ज्यादा लंबा प्रॉब्लम हुआ नहीं, बट कल को कोई इकोनॉमी वाइड रीजन हो भी सकता है, राइट, विच कुड लीड टू freezing of funds from the sources from where they are borrowing, and that is where this cushion will help them. And what is the negative effect of this low debt to equity ratio? Again, I'm asking this question. What is the negative effect of this low debt to equity ratio in case of Aavas, Aptus and Home First? Yes, Mukul, you are bang on. Low ROA and ROE. So ROA to nahi, but mainly ROE. Because of low debt to equity ratio, इनकी ROE आपको हमेशा कम दिखेगी. So don't get disillusioned by why ROE is कम. So ROE का एक reason है. Of course, when you compare an HDFC and Kotak with this, of course, if HDFC or Kotak is making a high ROE, probably they are doing much better than these guys. But don't look at ROE just as a जिसको बोलते हैं ना कि एक isolated figure की तरह नहीं देखना है. Try to understand why ROE is lower. So this ROE is low, but the positive side on their hand is that they have a long runway to growth. So unless you see the growth following up, you should not be on this bus. क्योंकि already you are into a business which is low ROE, and जो उसका main है engine for valuation going forward is the growth. If the growth tapers off meaningfully, like अगर 25-30% से grow कर रहा था वो सीधा गिर के 10-15% पे आ जाए, that is the time to completely avoid these businesses. And sometime in the future it may happen, or it will happen rather. So that would be the time when you should definitely get out of this business, because ROE इनका नहीं बढ़ सकता है. ROE तभी बढ़ेगा जब ये लोन ज्यादा ले लेंगे. जब ये लोन ज्यादा लेंगे, कब लेंगे, that is something which we don't know today, right? And that is why you can see over here cash to asset भी इनका कितना high है, right? And you look at the ROE, despite that kind of structure, ROE is still better. उसका reason यही है कि उनकी spreads बहुत अच्छी है. भले ही इनका cost of borrowing high है compared to bank, they lend at also a higher rate, so they maintain, and because the competitive intensity is far lower here, so their ROE is much better. But look at the ROA of Aptus and compare it with Home First and Aavas. So that 8.2 optically looks a very large figure, but understand this, a large part of that ROE comes through the non-housing finance book, which is a completely different ball game. So look at that separately before jumping the gun. Okay. Now, this again is from one of the con calls of Aavas. I think it was from FY22 or FY21 con call. You put a finger on India map and ask within 5 kilometers of this finger how many customers you have funded and their demographic and their collection pattern for last 7 years. It is on click available. That is how technology savvy Aavas has become over the years. They were not that much techno savvy, say, prior to FY19 or FY20. But in the last 3 years, they have definitely stepped up their investment in technology and focus towards technology. And what are some of the wow factors which technology brings? Loan origination, underwriting, collection, and early warning systems. ये चारों चीज में बहुत अच्छे से help करता है. So one area where Home First is way ahead than Aavas and Aptus is in terms of the loan origination and turnaround time. They managed to wrap up or to give loans to their customers sometimes in 48 hours. To all of you who would have taken a housing loan in your city or town, I'm sure you would have used a bank, and I'm sure एक महीने से पहले तो कोई भी नहीं करके देता, and they'll keep coming up with ये document चाहिए, वो document चाहिए, ये document चाहिए. So that is one advantage of having technology. Loan origination. Second is underwriting. Because of technology, many things of underwriting you can use it by using the benefits of technology. It will reduce your turnaround time. You can use the AI tool to score the credit worthiness. In fact, so Aavas, in one of their management, in one of the interviews, they were mentioning, I don't remember whether it was con call or some other interview, where they were saying that the best part of this technology app is that technology enablement is that they get the early warning signal कि 3 महीने बाद अगर 1000 लोग हैं जिन लोगों ने लोन लिया है, कौन से 100 लोग ऐसे हैं जिसका सबसे ज्यादा प्रोबेबिलिटी है कि वो डिफॉल्ट करेगा, उसको जाके तुरंत में चेक करो. So they will, if required, they'll go personally and meet them and try to understand their situation and just talk. That is the biggest advantage of bringing technology into their picture. Right now, this is culture. Again, this culture I'm talking about Aavas, which we have noticed. Zero CP exposure, you will see multiple instances where the management has conveyed that, and say do ratio is 1. So jo bola hai wo kiya bhi hai. We have never seen CP exposure. Liquid balance sheet, as we have covered that already. Balance sheet clean hai, liquid hai, debt equity ratio बहुत reasonable है, and diversified फंड मिक्स है. ऐसा नहीं है कि कोई 2, 3, 4 बैंक से ही कॉन्सेंट्रेटेड है कि वहीं से सारा लोन आ रहा है इनके पास. राइट, दे आर वेल डाइवर्सिफाइड इन टर्म्स ऑफ देयर लेंडिंग सोर्सेस, बोरोइंग सोर्सेस एज वेल. राइट, लर्निंग मशीन. सो यू कैन, आज के दिन तो बहुत इजी है. यू पिक अप FY12 का एनुअल रिपोर्ट, you pick up FY16 का annual report, you pick up FY21 का annual report, and you pick up FY23 का annual report. सारे annual report पढ़ने की जरूरत नहीं, मैं आपको 4 बता रहा हूँ. आप चारों में पढ़ो और आप चारों में देखोगे कि वो कुछ नया बता रहे हैं कि क्या उन्होंने नया पिछले मिस्टेक से सीखा और कैसे ये किया. And the best part about a company like Aavas is that 15,000 crore का बुक होने वाला है इनका AUM. Again, rather than me giving the answer, I'll first pose this question to the audience. So you all know that they are catering to a section of the society which is risky, which has no formal income, which are vulnerable to economic shocks. Right? Now my question to all of you is this. And a company like Aavas Financiers, which has an AUM of roughly 14,500 crore today, over the last 12 years, कितने क्वांटिटी के या कितने अमाउंट ऑफ लोन होंगे रफली जो इन्होंने राइट ऑफ किए होंगे? डोंट चेक ऑन द इंटरनेट एंड आंसर, जस्ट ट्राई टू आंसर ऑन योर ओन. आई विल जस्ट रिपीट द क्वेश्चन इफ यू हैव नॉट गॉट. 400 crore, less than 1%, 3%. Okay. So Sunny, 400 crore is a little far from the right answer. The right answer, anyone else who wants to? Yeah, Aman, you are very close to it. So as of now, 25 crore is the only amount which they have used as write-offs. मतलब ये वो है, out of 15,000 crore का book, 23 crore का book वो है, या 25 crore, somewhere around 23 or 25, जिसमें the borrower did not pay and they could not recover the full value and they had to write off. That is the only, and we are talking about one of the riskiest place, riskiest borrowing profile, one of the most difficult place to be in. And you have cases where There could be interest rate up and down in the society, in the economy, right? Even then they have been able to do that. And why they have been doing that? This I would say a lot of it has to go with the DNA or the culture of the organization. In fact, we did a small experiment of finding the word sustainable and consistent growth. So in FY21 annual report, it was said 22 times. In FY22 annual report, it was said 22 times. And probably in FY23, they stopped doing it. So 2 times. But the point I want to make over here is that they are looking at this business as a marathon. And they're always looking 3 to 5 years ahead. They're investing in people. They're investing in branches. They're investing in technology. These things will hit on your P&L. Aapki margins hit honge. Aapke cost to income ratios hit honge. But all this will lead to further better quality of assets, further more growth in the future, which will further improve your balance sheet, further improve your credit rating, right? So that is how they look. And I personally, my style of investing is that I like businesses and business owners who are thinking long term, who are thinking beyond the next 2 years or next 1 year, right? And the best part about businesses like Aavas and many other businesses in which I and SmartSync services are invested in is the win-win model. I think the best businesses to invest are businesses which have a win-win model where everyone in the ecosystem wins, right? So आप ये देखो इसमें जो virtuous cycle है वो simple यही है. Sustainable growth आपने देखा ही है कि 2012 से लेके अभी तक का growth sustainable रहा तो उनकी credit rating improve हुई है massively. Better credit rating means your cost of funds will lower. Lower cost of funds means again higher profit. Higher profits again passed on to the borrowers in the form of lower interest on loan, which they have been doing consistently by keeping their spreads constant. And lower interest rate makes more customers come to them and lead to further sustainable growth. So that is the business model and the win-win model of Aavas Financiers. Now, this part is very important because on the left-hand side, we have Mr. Sushil Agarwal, who was with Aavas right from day one. And he was instrumental in keeping Aavas or making Aavas reach this level. And suddenly in the last year or so, in fact, in the last 4 or 5 months, there has been some events which has not been a happy incident. Many of these things are very much clear or available on the internet. Aavas held their annual day meeting sometime in the month of June or July, if I'm not mistaken. I attended that online, and many of my colleagues also attended it physically in Mumbai. So there they very clearly mentioned why there was a shift which was happening. Sushil Agarwal was a person who was, and I have been a fan of Sushil Agarwal, let me just put that. He was instrumental in bringing Aavas to this stage. And he was always a hands-on person where he would immediately take up his vehicle and go and meet the customer and see the area, and he would travel extensively. So in our scuttlebutt, we found out that on an average, his car would travel somewhere around 3 lakh to 4 lakh kilometers a year. That was the kind of travel he used to make. Last year, somewhere in FY23 starting, from CEO, he was made to MD, and Mr. Sachinder Binder, he also has a very good track record in the lending space. He joined as a CEO, and Sushil Agarwal was asked to take a step back in the sense that you will be involved in the strategic discussion, but we will need your guidance in all the strategies, but you don't be part of the day-to-day affairs. But that is something what probably didn't go well with him, because that is what was communicated by the new management in the analyst day, and that is why he probably quit the organization. Now, what happens when a star or a very well-known or popular MD leaves an organization? So you can see the stock price. Of course, the stock price started falling way before this incident happened. So last year in 2022, Aavas was at one point of time available at 3,000 rupees. Price to book was at around 7-8 times, which was by no means cheap at all. And if you look at specifically in the month of March and between March and May, that is the time was the announcement when Sushil Agarwal left. So I see a very clear pattern here. Markets always hate uncertainty. Market thinks कि अरे वो चला गया, अब नया कोई आएगा, वो वैसे उसकी तरह कर पाएगा कि नहीं कर पाएगा. I'll give you another relevant example here from a different industry. Okay. Some of you might be aware of the company called Balkrishna Industries, which sells BKT tires. If you go back and see the history of BKT, the whole business was set by a person called Yogesh Mansaria, who basically turned around a loss-making tire making company to a very large money spinner in the span of 10 to 15 years. Suddenly in 2006, because of a family dispute, he was asked to go. So Mansaria family से वो business आ गया पोद्दार family के पास, पूरा control. मतलब रातों रात पूरा control change हो गया. If you would have not looked at that business or think you would have ignored that the business की नहीं पूरा जो main जो बंदा ने जिसने बनाया है, and that time BKT was a very tiny business. ऐसा भी नहीं कि BKT was very large here. But look at how BKT has done and why it has done. Credit should be given to Mansaria. He made it to a certain level where it was in a winning position, and the credit should be given to Poddars also. They just continued what Mansaria had made, and they didn't make any mistake like unnecessarily diversification नहीं किया. जो business में थे उसी business में capex करते गए, volume बढ़ाते गए, अपनी competitive strength बढ़ाते गए. They didn't do so. I would not call them as great management, but they were someone who never did anything stupid. That is where I will now bring you to Aavas here. Even though probably Sushil Agarwal was one of the main person behind the growth of Aavas, I don't think a company which has 15,000 crore of AUM is just resting on Sushil Agarwal's shoulder. In fact, he has made so much of systems available in the business. It's an institution now. In fact, I'll just share one incident which we learned from the management, that 6 बजे आवास के सारे offices के internet और systems बंद हो जाते हैं अपने आप. So even if you want to work on anything, you are not allowed to. आप अपने घर से भी नहीं काम कर सकते हो, ऑफिस में भी नहीं होगा, कहीं पे भी नहीं होगा. मेन जो सिस्टम है, सर्वर है, वो बंद हो जाता है. Just to keep जिसको बोलते हैं ना work life balance, right? And in terms of reporting also, this problem was solved way ahead 5-6 years back. कि उनको दिखता था कि एक हफ्ता 10 दिन लोग खाली रिपोर्टिंग पे वेस्ट करते थे. So they optimized and automated it in a way that less and less time is spent on that. So when you have those kind of DNA in a company, I personally feel, of course, when someone of that stature has gone, we have to be more careful and we have to see whether the new management is continuing the same work or not. But we should not panic. Most people or most investors we talk about, they are just in panic mode. कि नहीं वो बंदा ही चला गया तभी कुछ नहीं है. I personally don't feel that is the right way of approaching it. Right? Now, with this, I think we have come to the end of Aavas presentation. Next company will be taken by Saurabh Bhai. If we have any questions, we can take that up before Saurabh Bhai starts. So I'll take 2 questions. So Vinod, you have asked once. I think Aman, both of you have asked. So I'll allow both of you then. Yes, Vinod, you can go ahead.
Thank you, Ankit ji. So my question is on this growth side. As you shown that growth, like we should look for the growth of the company rather than ROE, right? So क्योंकि इसमें क्या है कि पैसा ही हमारा प्रोडक्ट है, राइट? तो अगर हमें ग्रोथ चाहिए तो हमें पैसा लाना पड़ेगा कंपनी में. तो कंपनी में पैसा 3 जगह से आता है जितना मैं समझता हूँ. एक होता है हमारा ROE कि जो हमारी अर्निंग्स है उसी को हम रीडिप्लॉय करते हैं। दूसरा आता है लेवरेज से, कि जहाँ पे हम लेवरेज ले रहे हैं। और तीसरा आता है इक्विटी डायलूशन से, राइट। तो मेरा ये कहना है कि पर शेयर जो हमारा इंक्रीज होगा, मतलब पर शेयर जो रेवेन्यू और प्रॉफिट इंक्रीज होगा वो आरओई से ही होगा, राइट। तो आरओई जो है वो लेवरेज से ही आएगा, इक्विटी डायलूशन से नहीं आएगा, क्योंकि इक्विटी डायलूशन जितना होगा उतना सिर्फ प्रॉफिट बढ़ेगा, पर शेयर हमारा प्रॉफिट नहीं बढ़ेगा, टोटल प्रॉफिट बढ़ेगा अल्टीमेटली। जैसे आवास के केस में मैंने देखा अभी रिसेंटली लास्ट 3 इयर्स में प्रमोटर का होल्डिंग 51% से ऑलमोस्ट कम होकर 39% पे आ गया है, और रिटर्न ऑन इक्विटी ओनली 14% ही है एज ऑफ नाउ, राइट। तो और लेवरेज भी उन्होंने अभी 3x ही लिया हुआ है। तो अगर उनको अगर आरओई बढ़ाना है तो लेवरेज पे जाना पड़ेगा, और लेवरेज पे जाएंगे तो रिस्क ऑफ मतलब रिस्क बढ़ जाता है, एएलएम का रिस्क और एनी सब इवेंट्स का कुछ रिस्क है तो वो बढ़ जाता है। तो माय क्वेश्चन अगेन कम्स इट, and they are in a like an affordable housing finance which is like an again high I would say lower credit score kind of a people whom they are lending.
So Vinod, I think what you have said उसको आप हर एक चीज को आइसोलेशन में देख रहे हो। सो ऐसा नहीं है कि सिर्फ और सिर्फ अर्निंग्स। सो आप आरओई बोल रहे थे, बेसिकली यू आर टॉकिंग, यू मेंट कि जिसको बोलते हैं ना कि अर्निंग्स ग्रोथ से पैसा आएगा, या रीडिप्लॉयमेंट ऑफ और रिटेन अर्निंग से आएगा, एक वन। सेकेंड इज इक्विटी डाइल्यूशन, एंड द थर्ड वन इज जो लेवरेज बढ़ाने से। ठीक है, ये तीनों फैक्टर ऐसा नहीं है कि आप एक ही को यूज कर सकते, आप तीनों को यूज कर सकते हो, और इनके पास ये तीनों ऑप्शंस है। बट आप ऐसे सोचिए, इक्विटी डाइल्यूशन इज नॉट अ बैड थिंग, बट इट शुड हैपन एट अ प्राइस विच इज बेनिफिशियल फॉर द कंपनी। सो समझ लो, अगर आवास का या एप्टस का या होम फर्स्ट का आज के दिन देयर मार्केट में प्राइस टू बुक चल रहा है 4, कोई प्राइवेट इक्विटी फंड या कोई बड़े HNI या फंड हाउस कोई आ जाते हैं और उनको बोलते हैं कि वी आर रेडी टू क्या नाम है, फंड यू एट से 10 times प्राइस टू बुक। सो यहाँ पे इक्विटी डाइल्यूशन इज फेवरेबल फॉर देम। ठीक है, बिकॉज दे आर गेटिंग इक्विटी एट अ वेरी फेवरेबल मल्टीपल। हाँ, अगर वो इक्विटी डाइल्यूशन 4 times 3 times 2 times पे करते देन इट इज अ नेगेटिव थिंग। सेकेंड, इन टर्म्स ऑफ लेवरेज सेम वही कहानी। अगर आप लेवरेज 3x है, इनके पास ये है, क्या नाम है, स्पेस है बढ़ाने का, 3x का 4x भी कर सकते हैं, 5x भी कर सकते हैं, बट एट व्हाट प्राइस, एट व्हाट काइंड ऑफ बोरोइंग रेट दे आर गेटिंग, दोज आर इंपॉर्टेंट। ऐसा नहीं कि वो नहीं हो सकता। और अगर बोरोइंग लेवरेज बढ़ता है तो आपको इमीडिएटली दिखेगा आरओई बढ़ेगा। सो आरओई सिर्फ लेवरेज से ही बढ़ेगा ऐसा नहीं है, आरओए से भी बढ़ सकता है। अभी आरओई जो है, ये आरओए भी यहाँ से कैसे बढ़ेगा, जब उनको ग्रोथ आएगा इन द एग्जिस्टिंग दिस थिंग। सो देयर आर मल्टीपल वेज इन विच दिस थिंग कैन हैपन। इट्स नॉट अ, मतलब एक साइलो में नहीं देखना है कि सिर्फ इसी से होगा या उसी से होगा, राइट। या आई थिंक Amar, I'll go with you first because you have not asked for a long time.
Yeah, thanks, Ankit. First of all, the excellent case study on Aavas. Since I have not been invested in Aavas, this was an eye-opener for me. My question is more of a curiosity question. I cannot suppress my curiosity. So, knowing you, Ankit, for quite some time now, right? You are very systematic. आपका SIP भी मतलब month का first date को जाएगा ऐसा. Now, when Aavas came down from 3,000 to 1,500, and it was because mostly of the uncertainty of social exit, you knew the business and stock price. अगर take out the equation, अगर business सब जगह पे सही है. My question is, did you increase your SIP amount on Aavas, or how is it, or will you still stick to the guns and say कि नहीं, this is what we had decided, this is how I go my systematic course?
Yeah, so Amar, this is a very interesting question, and see this, my personal view or my personal style may not be applicable for all of you who are present here or anyone who will watch the recording. But why I do that is something which works for me, where I believe not thinking too much about allocation is one very good way of focusing more on the businesses. which businesses I can study and keep in the watch list and further replace one of my portfolio stock. What you are saying is right. कि अगर आपको कंपनी पता है और वो नीचे गिरती है, वैल्यूएशन अट्रैक्टिव होता है, तो probably you should increase. But I don't get married to any stock in my portfolio. For me, the 20 stock portfolio makes much more important. And mind you, at even 4 times price to book, of course, Aavas in comparison to the peers looks reasonable, but it doesn't guarantee you a very good performance in the next immediate 1 year or 2 years. So that is why I will not try to time it. I don't know how much pain is left. I don't know the new management. And even though I am very confident about the business, I will still stick to my this thing, because many a times, Amar, what happens is कि हो सकता है आवास रिकवर कर जाएगा यहाँ से, लेकिन it may take 2 years or 3 years. I don't know. Or maybe it will recover in the next 1 year. So आप alternately सोचो, अगर ये 2 साल तक रिकवर करता है, don't you think it makes sense कि वो मंथली बेसिस में आप डालते जाओ और उसके बाद जब वो रिकवर होगा एक बार में, फिर आपको फायदा मिलेगा उससे. So what you are saying is absolutely right. If you are sure that this is the bottommost point and now I can really time it, I should go all in. I find it very difficult for myself to do that call. Saurabh Bhai is a wonderful person in that sense. He identifies bottoms and tops really well, and he has shared that umpteen number of times on social media.
मैं भी एक बार में नहीं करता हूँ. That is why I told in the beginning, purchase the first tranche because I don't know when it will happen.
Exactly.
So I don't do a SIP, but I divide into 3-4 tranches, and I have rules around कि पहला tranche कब डालना है, दूसरा कब डालना है, because I find it very difficult to time to perfection. Not possible, at least for me.
Right. So Amar, I hope you got the answer to the question, where basically it is not so easy. अभी भी ये bottom हो गया कि नहीं हो गया, I don't know. And मतलब Saurabh Bhai probably will cover that in the technicals towards the end, but I am never sure whether it has bottomed out or not. So there is another stock. Let's not talk about other stocks and all. So let's come to the questions now. I think we have covered 2 questions now. बाकी लोगों को मैं request करूंगा कि let's hear Saurabh Bhai first, and then we can take your questions. सारे questions लेंगे. Even chat में भी I'll again go to the chat and I'll see if we have missed any questions, and we'll answer everything. Okay. So Saurabh Bhai, I think you can. I'll just stop sharing. You can.
People don't want break because I think it has been 2.5 hours. So should we continue or?
So as जनता से पूछ लेते हैं सबको क्या करना है.
I can go on, but just for everybody's comfort.
I think ठीक है, तो ब्रेक लेना है तो what we can do is ब्रेक में क्वेश्चन ले क्या?
Break momentum is good.
Because
Yeah,
break
we can take questions on. Okay, it's how long? We don't know, yaar. It might take 1.5 hours more. That is my estimate. So we have a competitive analysis, CanFin, risk, valuation, technical, and summary. Yeah, 1.5 hours लगेगा.
1.5 hours तो लगेगा, हाँ.
लगेगा.
So I would say that let's. Okay. So
let's take a 10 minutes break and we can address the questions in between.
Sure. So anyone has any question, you can ask, or let me just check the hands again.
So there was one question repeatedly on DHFL, how we could have identified the DHFL thing before it happened. So if you go into DHFL history, and I just want to show you something, not to say that, I am good at it, but just to highlight that what I'm telling, you might feel it's all good in hindsight, but it's not good in hindsight. There was some proof around it. So if you consider DHFL, Yes Bank, I was active on Value Picker that time. This is the September 18 month when the first fall started in HDFC Bank. If you see, this was the 18 September time. It used to be around 400. And this is where the first fall started. So it's not like I'm telling when things have fallen 50% and all, it was almost at the top. And I had a point of view, and I will tell you how this point of view came. So basically, see, these sectors are not easy. That's the first thing. And that is why I told ki the ground experience is very, very important. Second, nobody will know if it is a fraud or what. If you have 10 indicators and 4 indicators are telling there is something wrong versus 1 indicator versus 7 indicator, everybody needs to draw a line where you want to stop. Do you want to stop when 20% of the indicators are saying something odd or 40%? That's a personal line one need to draw. But the thing is, when you have certain indicators telling it doesn't look good, then you need to be cautious. And it comes from multiple things. It comes from reading, tracking management on the ground. Luckily, I had friends in the industry, and at least in finance, I keep taking feedback, and especially when things don't look that easy, because when you look at the books of Yes Bank, I will cover DHFL also. If somebody is lending heavily to infrastructure sector and all, how you can have your NPAs at rock bottom and nobody else has? So that itself was one worry point. And of course, on ground, I had friends. The feedback I got was basically it's a one-man show and all the decisions are there in his pocket. In lending, I don't want to invest in a company which is a one-man show where one person takes decisions. So this is how Yes Bank happened. If you look at DHFL, forget about DHFL books. If you study the history, there is a company called HDIL. I don't know how many of you know HDIL. 2012-13 में आए थे कि हम पूरा वो बॉम्बे में यार कौन सा एरिया है which is called like the lower part of the strata. I am forgetting the name. But they were supposed to do a lot of redevelopment and a lot of corporate gochi happened. Now, if you go back in history, this company had certain transactions with that company, which was not reported. So already you have some kind of historically evidences, which is bad. Dharavi and SDA was supposed to do the whole redevelopment of Dharavi. Kafi kuch story build hua tha. So if you go DHFL, HDAL, there is a history around it. If you study the research, the company will know. The second trigger, if you look at this company, up to financial statement is abhi available nahi hoga. It used to have very high leverage, 10-11 times का leverage. और 10-11 times का leverage लेके भी आपके ROA numbers वो सब kind of okayish थे. The third, but the worst part was, if you look at the spread of this company, I think this company used to trade at a spread of 1.5, 1.6. Just imagine you are on 10 plus leverage at 1.5% spread. If anything goes wrong, just imagine what all can happen. So अब वो fraud था नहीं था, ये सब कोई जानेगा नहीं, but you have to connect all the dots. And as I said, I had friends again, a lot of these companies. So I used to get my signals, and when you combine with what you see in terms of numbers, you combine with how some of these transactions have happened with companies which didn't have good history, it gives you a probabilistic sense ki, and I am a guy who usko paisa pehle mujhe bachana hai, uske baad paisa banana hai. So all that guy gave him. The fourth thing came. I will show you. This is a blog I wrote in 2018. Before that, nobody used to, I can tell on record, nobody used to discuss about shareholding data and all. I think it was one of the first blog written to highlight how stocks are pumped and dumped using retail investor. And this was April 2018, March, April 2018, when Yes Bank, DHFL, all these stocks came. And I knew some of the popular guys who were long on this, telling, nahi, isme value hai, ye hai, wo hai. I tried to highlight, and there's a whole data of testing right from 2012, 13, 14, 15, 16. How these stories probability was not in favor. Maybe a company recover kar jayegi. 90% of the company became perennial well destroyers. And this is where यहाँ पे भी कोई exit करता 50% का loss लेता, 90% का तो loss नहीं होता. But again, this was like nail in the coffin for me कि जो हो रहा है, there is something going on. So when you combine all of this, and now I think already Ankit bhai highlighted about some of these companies, आप Aptus को compare करो home finance से. Abhi will do one more competitive analysis. So you have to understand the nuts and bolts of how ROE is coming. When I look at that kind of spread, I'm not comfortable. And when I look at, and you can't look at the numbers in isolation. When I look at that kind of 11 times leverage and then this kind of ROA, I'm not comfortable. when I look at that historical transaction being done with HDIL, I'm not comfortable. So when you combine all of this, you get a mental view, and then of course you need to prioritize whether it's something worth doing or not. So I hope that answers on the DHFL part. Yeah, let's go ahead for more questions.
In the meantime, you can start sharing your screen so that once we take the question.
Yeah.
I think Aman wanted to ask and he had raised. So Aman, you can go ahead and ask your question.
Thanks. My question, I have two questions. First question is that I have read in the transcript of the Aavas कि उनका फ्यूचर प्लान है कि वो भी को-लेंडिंग बिजनेस को भी थोड़ा बहुत पोर्शन देने के लिए, थोड़ा बहुत एमएसएमई की तरफ पे जाने के लिए, क्योंकि उन्होंने कहा था कि उनकी टीम से समवन है कम फ्रॉम IIM अहमदाबाद को-लेंडिंग बिजनेस मॉडल को सीख के आए. सो आपका उस पर क्या व्यूज है? फर्स्टली वो बहुत सिग्निफिकेंटली बहुत लो पोर्शन है उनकी पूरे एओ का, लेकिन जैसे आपने मेंशन किया था कि अगर एक बिजनेस अपने मेन कोर बिजनेस से थोड़ा डाइवर्ट होता है तो उसको आप कैसे देखते हैं? थोड़ा बहुत सिग्निफिकेंटली अगर वो दे रहे, वो माइनर में दे रहे, तो आप कैसे देखते हो उसके? ये बिजनेस तो पूरा प्योर हाउसिंग था, अगर को लैंडिंग और एमएसएमई की तरफ और नॉन हाउसिंग की तरफ अगर 15-20% भी देता है आने वाले 3 से 5 साल में. सेकेंड इज दैट कि आई कंप्लीट अंडरस्टैंड कि मैनेजमेंट को 2 to 3 years देने चाहिए न्यू मैनेजमेंट को अपने आप को प्रूव करने के लिए जो वो बोल रहे हैं, और पुराने मैनेजमेंट ने एक डीएनए पूरा सिस्टम सेट कर दिया है, तो सिस्टम को ब्रेक करना बहुत हार्ड होता है. लेकिन अब क्योंकि ये बिजनेस हर एक के रडार पे आ चुका है, हर एक को नोन है, चाहे फंड मैनेजर हो चाहे FIR हो, बहुत पहले से ही. तो अब जो कि 4 के प्राइस टू बुक पे है, तो आपको क्या लगता है कि अगर मैनेजमेंट कह रहा है अगर वो भी कर देता है तो इसकी प्राइस टू बुक री रेटिंग के चांसेस कितने आपको लगते हैं नेक्स्ट 3 to 5 years में? क्योंकि अब मैनेजमेंट ने खुद ने कहा कि हम 30% की ग्रोथ नहीं दे सकते, आने वाले टाइम में हम भी 20 से 25 का ही ट्रैक करेंगे क्योंकि एम साइज बढ़ गया. तो आपके क्या व्यूज हैं? एक तो प्राइस टू बुक री रेटिंग के चांसेस और मैनेजमेंट को लैंडिंग और एमएसएमई को जो थोड़ा बहुत देख रहा है उसका.
So वैल्यूएशन वाले पे मैं अभी कुछ नहीं बोलूंगा बिकॉज वैल्यूएशन विल कवर इन द सब्सिक्वेंट स्लाइड्स, वहां पे आपको आंसर मिल जाएगा. बट इन टर्म्स ऑफ को लेंडिंग एंड जो एमएसएमई बुक है आप बोल रहे हो, तो अगर आप देखोगे आवास के केस में, एक तो सबसे पहली बात को लेंडिंग कुछ अलग नहीं है. जो ये काम कर रहे हैं हाउसिंग फाइनेंस में, उसी में दे विल पार्टनर विद बैंक्स. बैंक्स के पास लोअर कॉस्ट ऑफ फंड्स रहता है, इनके पास इनकी अंडरराइटिंग स्किल्स रहती है, दे विल कोलैबोरेट एंड डू दैट. सो ऐसा नहीं है कि कुछ नया कर रहे हैं. सो इट इज नॉट डाइवर्सिफिकेशन, इट इज जस्ट एक्सपैंडिंग ऑन टू समथिंग एंड creating more opportunities to grow. So co-lending in that sense is not a problem. Okay. Of course, there are execution related things which we have to keep on monitoring and see how they will be, because अभी तक जो भी काम कर रहे थे वो अपने से कर रहे थे. अब जब बैंक के साथ मिलके करेंगे तो क्या क्या challenges आएंगे, how smooth it is, those things we have to keep a tab on. ठीक है. Now coming to MSME, if you see management consistently in their calls and annual reports, they maintain that why they are into MSME. अगर आप देखोगे, there is a company which got listed last year maybe, 5-star First Finance. So उनका जो प्रोडक्ट है ना, और जो ज्योग्राफी है और जो कस्टमर प्रोफाइल है, एग्जैक्टली वही काम करते हैं एप्टस और आवास इन द MSME वाले में. ठीक है. मतलब जो आवास का जो MSME है, एप्टस में ऑफ कोर्स और भी चीज है, बट आवास का जो MSME है वो वही है. बेसिकली लोन अगेंस्ट प्रॉपर्टी के टाइप का ही होता है कि यू गिव once you have a property, you can use that for your business also. ठीक है. लोअर टिकट साइज होता है वो भी, और उसमें भी यील्ड बहुत अच्छी रहती है. इनफैक्ट बेटर यील्ड होती है कंपेयर टू हाउसिंग फाइनेंस में. प्लस वो मार्केट भी, जैसे अभी अफोर्डेबल हाउसिंग फाइनेंस में धीरे धीरे अवेयरनेस होने के कारण, कंपटीशन होने के बाद वहां पे ग्रोथ अब धीरे धीरे, जो पहले 30-35% था वो अब नहीं है, बट MSME में इट इज स्टिल वेरी अंडर पेनिट्रेटेड, तो वहां पे ग्रोथ 30% प्लस है. सो इन अ वे दे आर डूइंग इट राइट, but they don't want to get overboard with it because it comes with its own challenges, own different sets of risk profile. So they have maintained ki even though that is a high growth area, they will remain as 70% book को, आवास की बात कर रहा हूं मैं, बाकी सबकी बात नहीं कर रहा हूं, कि वो 70% हाउसिंग लोन से ही रहेगी. So predominantly they'll remain a affordable housing finance company, even though they diversify a little on the MSME side. And I would say they are doing it the right way, because आपके पास, आप ऐसे सोचो ना, एक रूरल एरिया में जहाँ पे बहुत कम बैंक्स या किसी का ये है, वहां पे आपने ब्रांच बना लिया, वहां पे आपकी टीम है, अंडरराइटिंग कर ली है लोगों की, वहां पे आपने लोन दे दिए हाउसिंग के, और वहां पे बैठे बैठाए आपके पास अपॉर्चुनिटी है एमएसएमई का, मतलब बेसिकली एमएसएमई वर्ड यूज नहीं करना चाहिए, वहां पे आपके पास अपॉर्चुनिटी है बेसिकली उन लोगों को ही बिजनेस लोन देने का, एंड दैट टू अ सिक्योर्ड लोन वेयर योर लोन इज गेटिंग सिक्योर्ड बाय देयर प्रॉपर्टी इन विच दे आर लिविंग. मतलब I would say that is a very good strategy which they have started, and this started in the last 4-5 years only. In fact, last 2-3 years only for both Aavas and Aptus. I would say it makes sense for them, a very good business sense कि वो business जो afford 5-star जैसे लोग जबरदस्त तरीके से ग्रो कर रहे हैं, वो आराम से ये लोग भी कर सकते, क्यों नहीं करते? ये लोग कर रहे हैं, उसको टैप कर रहे हैं और उसमें ग्रोथ ज्यादा है. Of course, you have to keep on monitoring whether the yields are good, whether the spreads are maintained, and whether the growth is sustainable or not. But I don't think that has a risk at all. I hope that answers your question. Yeah, and in Aman, in relation to that valuation, we'll cover that in when the valuation slide comes in. Okay. Abhi, let me see. Farshad Ahmed, I think you have asked for the first time, so I'll go with you first. Yeah, Farshad.
Thank you, Ankit sir. Thank you, Saurabh sir. It was very, very good so far. So one question I had was looking at Home First Finance. Just wanted to understand your perspective on, heavily tech-based model and heavily tech-based business model versus a very balanced model, which, probably my guess Aavas has. Ankit sir, you mentioned earlier that there is a bit of subjectivity when it comes to underwriting, collections, customer experience, following up, which I believe an experienced player like Aavas might probably have based on years and years of experience, which a newer player like Home First might not have. And they are heavily reliant on tech. And as you yourself mentioned, the number of branches are less, their OPEX ratios, might be lesser than Aavas as well. So does that make it an inherently riskier model compared to Aavas? Because right now, since the cycle might be good, customers might be paying, so, the NPAs might not come up so much and the numbers might look very similar. But when in tough scenarios, a player like Aavas, who has a very balanced model versus an Home First, which has a tech-heavy model, might, be better off. So just wanted to get that perspective.
Sure. So, Farshad, I would say first, if you go back and see the history, almost at the same time, both these companies started, as in all the three companies started. 2-3 साल का आगे पीछे है. Aavas probably started the earliest at around 2010, and Aptus and Home First started in 2011, 12 या 13 में हुए. ठीक है. And I take your point that, of course, when you cater to these kind of customers, there is more touch involved, and many of them are not tech savvy. But look at it from a different angle. So even though, as I mentioned, I like Aavas model much better, but I would not discard Home First model, because there is a lot of merit in that model as well. Because when you come to tier 1 and tier 2 cities, and when you see people who are pretty much tech savvy, and they can, well, I'm not talking about the normal people like you and me who are well educated and had a very good, but I'm talking about normal people who would be probably working in a factory as a laborer or something like that. But tech की उतनी समझ उनको है कि they can get themselves onboarded on an app and feed their data, whatever is required. So I think from that angle, Home First is also doing a good job, and it actually, the tech thing leads to faster turnaround and faster growth. So in fact, what Home First has been doing, Aavas is actually trying to copy that now after this thing. But if you ask me my personal choice, I would still say that टेक होने के बाद भी आपके पास ब्रांच होने चाहिए. एंड अगर आप होम फर्स्ट का भी कॉन्कॉल्स देखोगे, सो नाउ दे आर इंक्रीजिंगली गोइंग फॉर ब्रांचेस एज वेल. दे आर नॉट जस्ट फोकसिंग ऑन द टेक. So that point is still there, right? Saurabh, you want to touch
Yeah.
upon this?
Yeah, just to add to Ankit, so because Ankit bhai covered Aavas, and in that he covered Home First, but we have not studied Home First at a standalone company, but we have a competitive analysis section where we will discuss more about it. So there are more dimensions to Home First business model. So my suggestion would be further, let's wait for that, because when you will see those are new things you will learn about Home First, that will help you to have a much deeper perspective on Home First. So let's wait for that competitive analysis section, and maybe that time your view might change a little bit or whatever, but let's wait for that.
Sure, thank you.
Thanks. So I think there are no more hands being raised, and Saurabh, I think 10 minutes are also over. So you can probably now start with Canfin Homes.
Okay, Kshitij had a question.
Okay, let me check that. Just a second. Isn't having a slightly higher spread is better for Aavas because it would increase the balance sheet strength for future down cycles, although having NPA write-offs is just an evidence of them. Future is always unpredictable. Further, it seems like high interest rates are here to stay. How it will impact? Yeah, Kshitij, so these are two very good questions. So first of all, never look at it in silos. I'm taking the first question first, right? So never look at it in silos ki nahi, ya to high rehna chahiye ya low rehna chahiye. There should be a very good balance. And why there should be a balance? So even though what you are saying कि अगर आप high वो रखोगे, क्या नाम है, spreads high करोगे, तो आपकी balance sheet strength बढ़ेगी. But you look at the balance sheet strength of Aavas even today, they don't need that much strength. Now they need, what they need is, अगर आप मुझसे पूछो कि आज के दिन सबसे ज्यादा जरूरी क्या है कि at 14,500 crore का book, if they can able to grow at 25% year on year, that is more important for them. And how they make sure that they will be able to do that? By regularly staying closer to the customer, providing them the rate which probably none of the other competitors will provide them, which will lead to stickiness. That is the most important thing for them today. But of course, what is more important, what is also to be looked at is कि एक लेवल के बाद स्प्रेड गिरना नहीं चाहिए. ऐसा नहीं होना चाहिए कि just to grow their business they are sacrificing their margins. But I would not look at this margin ना, मतलब आप स्प्रेड देखो, ऐसा स्प्रेड कौन सी अदर बिजनेसेस के पास है? Forget about Aptus and Home First. आप बाकी लेंडर्स को देख लो ना, कहाँ पे इस तरह का स्प्रेड्स होता है, and that too consistently, right? So that is the answer to the first question. And what was your second question? Yeah, so high interest rate probably will, you are rightly, you're right here कि high interest rate शायद अभी for some time it will stay. But again, if you look at the history of affordable housing finance, they are far less elastic or sensitive to interest rate movement than the other section of the economy. And because a player like Aavas, who has consistently reduced their rate when their cost of borrowings went down, when they slightly increase their rate, the customers are also willing to pay because they understand these things, right? And housing for these kind of customers, it's a very, very, very emotional thing. Most of these, try to imagine, most of these are from small towns, जहाँ पे आपके लिए आपकी personal इज्जत बहुत important होती है. So they will not default itna easily until and unless you are in a really bad position financially, right? So compared to other lending institutions, affordable housing finance companies are hit less during this interest rate upcycle. I hope I answered your question, Kshitij. Saurabh, I think we can take rest of the questions later. थोड़ा
Okay.
PPT पे भी आगे बढ़ जाते हैं.
Yeah. Okay. So I will cover Canfin Homes, and the reason I'm covering it because if you saw the initial slides, this has been one of the company जो at least 0% return पे आ गया है. And the numbers didn't look bad. The business performance didn't look bad. So we thought let's understand this company also. Though it's not perfectly affordable, it's somewhere in the middle. Affordable आप देखोगे तो their average ticket size will be 7 to 11 lakh. Canfin ka average ticket size is around 20-21 lakh. This has a parentage of Canara Bank. So of course there is a PSU tag, 35-year-old company. They are mainly present in the salaried class. Almost 80% of the lending happens to salaried class. 22 lakh is the average ticket size. And they're present primarily in Southern India. So 65% of the loan book is there from Southern India, which they have been able to diversify Southern India, but not beyond non-Southern states. So I think 20% is Bangalore, 20% is Tamil Nadu, and then rest of the southern parts. And currently they are at a loan book of 10,000 crores. So I think वो market में बहुत popular है कि आप मतलब 15-20 हजार करोड़ 25 हजार करोड़ के आगे grow नहीं कर पाते हो. At least this has been one company which has kept on growing. And if you look at 2016, 19 में 20,000 crore था. So you had COVID and all, and still in 4 years from 20,000 crore, they have gone to 31,000 crore, which looks okayish, not great, but okayish. If you look, this is the average ticket size, and that is why 22 lakh is the mean ticket size. And one good thing about it is they are very conservative. They don't get into much of non-housing things. Almost 89% is housing loan. Iska bhi ek breakup hai. If you look at this, 80% is pure housing, but housing inside they combine it, and some of them, and they call 89% is housing and 11% is non-housing, which is your LAP and all. So ek to pure play housing hai, and dusra majority is salaried. Which means they have a decent credit. They have high probability of having a decent credit history. I haven't found where they have revealed that what percentage of customers have a credit history. Home First declares that data, but this company doesn't. Even Aavas I couldn't find. But we can infer that if 73% are salaried, they will have a credit history. So this looks like a safer business model. And they are not competing with affordable because their ticket size is different. Maybe only on this 13% they're competing. But this is where the risk comes. They compete more with the banks and all, or the HDFCs of the world. And that is where the risk comes. And predominantly a southern player, it has been. If we look at the history, and this is almost 16, 17, 4 saal, or either 7-8 years of data you have, 80% housing loan, that is the good part, controlled NPA. So you have the whole history. Isme you got a demonetization, you got a GST, you got the RERA, you got the COVID, you had all the things. But if you look at the gross NPA, 0.2%, 0.43, 0.62, 0.76, 0.91, and then it peaked here, and then again 0.64 and 0.55. Net NPA never went beyond 0.6%. So looks relatively much more stable compared to a lot of other companies. Growth has been a relative challenge. So if you see this era of 16 to 19, the total loan outstanding went 16 to 21, 70 to 21, 1 year, 2 year, 4 year, 13,000 crore to 22,000 crore, and then 22 to 31 just in 2 years. So more growth has come here. Here thoda ye stagnate ho gaya tha, and it happened after a very huge growth. Other things, if you'll see, high ROE, but the ROE is high, but the reason is the leverage is high. So all the affordable, they work on 2-3 times leverage. This company works on 8 times leverage because of, as Ankit Bhai said, the parentage and all the things. And stable ROA. Whatever has happened, the ROA has not gone below 1.9% ever. 1.5% sounds a decent kind of ROA. And they are also having a constant spread. So first difference you see in the business model, this company works on a 2.5% spread. Affordables work on a 5 to 7% spread. The reason being they cater to salaried, they cater to more non-salaried or a mix of salaried, non-salaried. They cater to high ticket size, those cater to lower ticket size. So this is why it's a market where, you know, every market size is different, and we may not be taking loans from them, but for everybody there is a market. They have also never tried to extort, and I think it has been more a competitive phenomenon because they compete with bigger banks and bigger housing finance companies much more closely with affordable housing finance companies. So if those banks, they have to expand and they have to eat somebody else's business, Canfin will be more closer compared to an affordable housing finance company. So it might be compulsion rather than own decision to maintain these kind of spreads. The good part, again, when we look at all this history, is the NPA has been very much controlled. Even when you look at COVID kind of scenarios, when NPAs peaked, when slippages peaked, and there's a good report by Ambit where they tried to do on a 2-year lagging basis, which means they will take the NPAs of today, but they will take the AUM loan book 2 years back, so that the impact of, I don't know if you call it evergreening of loans and all can be discarded, and still it didn't go beyond 2.5%. And even if you look at the stage 2, stage 3, it's compared to much lower. Most of the, stage 3 is much lower. Look at the write-off history. You had all the 3-4 big events, and still the write-off has been very, very less. I have the write-off numbers also. So growth has been a challenge for this bank. And the reasons is maybe PSU parentage, there were 2-3 MD changes and all of that. So that is the main reason, but else they play in a safer arena. Apart from the big bank competitive risk, it's a fairly stable segment in which they play. They manage their books well. Now, if we look in terms of risk, so one is some of the disclosures were not great, and there were some internal frauds which happened. Branch level frauds happened. Something related to price decline and CEO resignation. It looked like, market was aware in advance. The ability to expand, and this is where I think technology plays a role. And I think one of the skills to differentiate companies is, do they have ability to go from one state to another state? And this is where some of the companies, Repco, if you see Repco in 2010, 11, 13, it used to grow at very high rate, 30-40% rate. But the moment they expanded out of Tamil Nadu, they faltered. And this is where you building a business in a single state versus multi-state is a very different skill set. Building scalability is a different skill set. And this is where the role of technology and all comes. And somewhere, some of these PSU-driven banks, they have not been great there. And hence the non-southern extension of the business execution expansion has not been that great. There is always a overhang of stake sale by Canara Bank. 3 साल पहले भी आया था, stake होने वाला है, stock ऊपर भागा, फिर वो नहीं हुआ, फिर नीचे आ गया. All of that keeps on happening. The other thing is, if you look at the number of loans disbursed per branch, it has almost stagnated. So the only way they can grow is in 2 ways. Can you highlight what are the other 2 ways they can grow apart from expansion of, apart from loan disbursed per branch? And Ankit, by this Minesh thing, I think Canara Bank had put on audit. So market is actually, I don't know, scared about whether this growth is Canara thinking he's too aggressive and that is why they're doing audit, or so those discussions are also going on. So branch expansion and ticket size, right? Or spread and all. So this is one lever, but they have the other levers. But when you look at the branch expansion, I think they are at 200 branches right now, 206. And they are telling in every year they will expand 15 branches, which is like almost 6-7%. And they're telling 4-5% growth rate will come from the ticket size. So they are giving a guidance of 18 to 20% growth rate. And actually last 1 year they have done after growth being slow. But how they will achieve, that's a question. And the other thing is they have revamped, they have tweaked their business model a little bit. So of course, this is Karnataka share and all, but let me show you. So one thing which has happened is, if you look 3-4 years back, they had 50% of the loans originated from DSA. That number has gone to 80%. Now looks like they have juiced out whatever they had to juice out. And at a loan disbursal per branch level also, they have almost extracted the best. So the only way looks like growth will come is either by having more branches or by having higher ticket size. The more they go higher the ticket size, the more they will face competition with the bigger entities and bigger competitive entities. And branch expansion, the numbers are 6-7%. So I personally, I am taking that 18-20% growth number with little bit of pinch of salt, because even if you combine both of them, it looks like beyond 13-14% could be difficult. But then, of course, there are good aspects about this company, which we have discussed. So I will also discuss the risk and the valuation part separately. But now you have some framework about how these companies are evaluated, how they are different from each other, how a pure affordable versus somebody who is in mid-tier is different from each other, what are the strengths, how the markets are different. Now let's look at all this competition with much more deeper data-driven insight. And I will include one more company called Repco, so that we have a learning of, what went wrong and all. So the first thing, if we look at, the growth has tapered. So if you see this number, this is 3-year rolling CAGR of net income and net PAT, which means I will take 2011 and 2014 and I will find what is the CAGR. Then I will take 2012 and 2015, 2013, 16. You can see clearly directionally the growth is coming down, 41, 39, 33, 27, 23. And then, of course, there was a COVID impact, and then looks like some growth revival has happened here, but these are almost around these levels. So growth is slowing down. That is another reason why your book values have come down, why these companies have corrected. Most of the companies, when I show you the book value, they peaked around 5 and 8 and 6 kind of book value, and the mean book value is somewhere around, and this is the current book value. So any company which you pick can fin from 5.2 peak book value, and look at when 5.2 happened in 2017-18. This company was growing at 33%. They came down from 33% to a 5% 3-year CAGR growth rate. Now the prices have gone up because again the growth has increased, but the sustainability of growth rate will be a question. If you look at Repco is another case. It went into very high NPAs and all. They couldn't expand beyond Tamil Nadu. They didn't have proper systems and all. So a lot of things have happened. So anyway, book value देखना सही नहीं है. As I said, कि खराब book सबसे सस्ता is not सबसे अच्छा. But if you look at Aavas from 8 book value, this company has also reduced, and this is where the major prices correction has come. And again, when you look at the growth rate of Aavas, it was almost 54-42%. So 50% reduction in growth. And that is why market has penalized. And from its mean book value, it's down because the growth is tapering. Now, the question is this a good book value or still something left? The other thing. But the latest 2 IPOs, if you see, these companies are there from 3, 4, 5 years and they've gone through cycle. These 2 companies, they have not gone through that kind of correction, and still the book values are above 4. We will see more about the quality of the book value and all. But the growth rate is also a little higher. If you see, it's 24%, 28, little higher than Aavas. So the question is, will they also correct in book value, or it will continue because the growth rate is little higher? But nobody can deny the fact that the growth is slowing down. And if we take another 10 years, so this is how we have to build the numbers. If you build the numbers, we have to accordingly set the expectations that we should not expect, more than 20% kind of growth rate. I think if they do 20% growth rate, that will be decent. If they do for next 3-4 years, these companies, they're growing at higher rate, but we'll see. So this is more on the growth and how the valuation has moved. But let us look at more granular numbers. So the first way to profile the risk, because we want to divide the company, which is more risky company, which is the less risky company. The first way to do the risk profiling is who is lending at what rate. And as we saw, Aptus lends at 17% rate. So when you are lending at a high rate, you are lending into higher risky segment. So even in affordable housing, Aavas and Home First lend at 13%, they lend at 17%. So of course, they're into much more risky segment. If you see a Canfin and a Repco, they're into different segment. Their lending rate are much lower, around 9%. And you know, as you grow into higher ticket size loan, more salaried class, more credit history, this lending rate will reduce. So on this basis, you can clearly see there are three different markets being targeted. One market is being targeted here, another is Aavas and Home First, and third is Aptus. And Canfin, again, how they manage that book, that's separate. But just on the basis of lending rate and target segment, the risk of that lending rate segment, Canfin seems to be better placed. Again, execution is there. Repco failed to execute, and we'll see in the NPA numbers, so it doesn't matter much. And Aptus looks like the worst place. So as I said, we should never look each number in isolation. We have to look at these 10, 15 things and then combine and then see together who looks best, together who looks worse. That is how we have to bring all the things together. And then we have to look ROE, ROA in that sense. So this is based on the loan book distribution. It's very, very interesting slide. We have tried to put different dimension. One, what percentage of loan book is pure housing loan? Second, what percentage of loan book is salaried class, which means some credit history? Third, what percentage of loan book? So there is a correlation with this because only Home First I could find they have the exact number of people with credit history, but we are taking a correlation. Salaried means relatively higher credit history. Then concentration of loan. Concentration could be an advantage in terms of growth, but when some bad risk event happens in a state, then the same concentration becomes a big risk. So state concentration, and also geographically who is present where. And then tier 3 and below. This is very interesting because one, it tells their distribution capability, their granularity of loan book, but also who has a bigger threat with bigger banks. And I think Ankit Bhai will mention in the risk, one of the big risks with affordable housing things is many guys who come, they are non-salaried, not part of credit system. They might take a 10-year loan, but the moment they spend 4 or 5 years in the system, paying the EMIs on time, their credit history, CIBIL score starts getting generated. And then they become the target of bigger banks. So it's like a treadmill on which affordable housing finance companies run. But because there is a long runway, a lot of people are still not have a credit history. The house penetration is still very less. There is long play to happen. But this is a treadmill where they need to find, and prepayment is a concept. So companies in the home loan segment, which are more closer to the big banks, where the moment big banks see that it's an opportunity, they will snatch. Those who are in tier 1, I think they're more closer to that. So that way, if you look at Home First has hardly any tier 3 and below penetration. So I don't know, I mean, 80% salaried class and 19% only tier 3 penetration. It's little different business model, and it's interesting. It has its own benefits, but it has its own threat also. It may not be a pure play affordable housing, or maybe the market might be very, very niche. And given bulk of the audience is in tier 1, they might have competitive threats from big banks once they start generating the credit history, because in terms of distribution capability, going to a tier 3, tier 4, tier 5 town and penetrating versus the same rate of lending customer compared to Aavas available with Home First in a tier 1 city, my sense is HDFC will try to target a tier 1 city first and then go to tier 3, tier 4. So that kind of risk is there. Then in terms of average loan ticket size, the higher loan ticket size, the more closer to the bigger banks. And bigger banks have their parentage, they have low cost of fund, those kind of advantages. So again, competitive threat. So when you combine all of this data, and the last and most important thing, especially in affordable housing, what percentage of your total staff spends time on credit? So Aavas again, so we again talk about Aavas has a little higher operating cost, Home First has lower operating cost. One reason is Aavas has maintained the whole credit process in-house. If I remember in some con call, they have almost a 200% legal team to manage a lot of these things. And 23% of the staff, they are credit-based staff. Whereas Home First, they have outsourced a lot of these things. So technology is good if it knows how to handle things. But if you if there is some mismanagement going on, then it could become a risk. But this is why Home First credit staff percentage is very, very low. So if we combine all of this from a credit risk perspective, if you see, Aptus has, now I will read the numbers. So if you see housing loan, higher the percentage of high housing loan, lower the chances of credit risk. So Canfin looks safe, pure play housing. Home First looks safe that way, pure play housing almost 88. Repco was an execution issue. Despite of this, executed very bad. Aavas is next to this. This is 70%. Aptus has only 56% housing loan. So I don't know even if we can call it like pure play affordable housing, because only 56% is housing loan and rest 44 is all non-housing and LAP and all. So Aptus is worst place. Canfin and Home First, they look best here. And then Aavas is there in the middle, but they have an execution history of last 10 years where the total slippages write-off has been hardly 25-30 crore. When we look at salaried, higher the percentage of salaried, lesser the chances of risk. So again, Canfin 73%, Home First 70%, despite of being in affordable because of Tier 1 city impact, because they have almost 80% book in the Tier 1 city. Again, if you look at Aptus, the lowest salaried class, 28%. Repco, 49, only 49, 50% was non-salaried. And Aavas is 40% salaried. So again, Aptus looks bad. So there is a reason why we are, and it is trading at a high book value, high growth. High growth is a double-edged sword when you try to look at these kind of numbers. So that is why there is not one reason why we are little cautious on Aptus, but when we try to combine a lot of these things, Aptus looks little worrying and Home First looks interesting with its own pros and cons. So this is where the credit history comes. So now state concentration, if we look at state concentration, don't take this as 65% single state. This is 65% southern, but the non-southern growth rate has not been that great. I think one of the challenges could be technology related challenges. Same thing happened with Repco, 56% concentration only in Tamil Nadu. The moment they went out, they faltered. Again, systems and processes, technology couldn't imbibe it well. Aavas still has a concentration, 39% in Rajasthan, but it is much lesser than these. And if you look at them, I think the last quarter looked like the highest growth, the highest number of branch opening they have done in the southern India. If you remember, it is in Karnataka. So I think scaling is a game of process and technology and all of that. And still to be seen how much they will diversify, but relatively compared to other players, it is better. Again, Aptus is 46% in a single state. So after Repco, Aptus is the second worst in terms of state concentration. And you can see that they have a higher, operationally that is more exhaustive. So we need to see if they have the kind of technology ability to scale and go beyond the state or not. Again, Home First is good that way, 36% coming from Gujarat. So that is why though, Aavas is an older player in terms of listing history and all. Home First does look interesting because of all these reasons, but the bigger reason being competitive threat and everything technology outsource. We need to monitor those parts and we need to look how all of this fits. So the only risk I see in Home First is one, the non-seasoning of book because of this high growth rate. Lot of loan book has been built in last 4 years. So one is little bit non-seasoning of loan book because of higher growth rate, because of the model they follow, competitive threat from bigger banks, and everything if it is outsourced, how it can backfire, that is something to be seen whether it will happen or it will add to its advantage. If you look at Tier 3 and below, again, so this is where Home First and Canfin, they look more susceptible to threat from bigger banks. If you look at Aavas, 75% Tier 3 and below, Aptus 83 Tier 3 and below. Repco, I don't want to, it's more of a use case to highlight what all has gone wrong. Now, this is where if you look at the credit rating reports of Aptus and Home First, because they have lesser history of listing history. We don't know how management has behaved in worst of time except COVID. And it says 41% of its loan book is non-housing loan, which includes quasi-home loans, constituting 17.56% of loan book. So one, if you see, it's not a pure play housing company. Historically, there are evidences that companies like PNB, HFL, and all those who have gone through this path, the end was not good. The other thing is the portfolio is less seasoned, as majority of the portfolio was originated during last 5 years, as against the tenure of majority of loans which are arranged, because that 40-50% growth rate, bulk of the book has been built. So time will tell, next 2-3 years will tell how it will shape up. But for somebody who is risk averse, there are a lot of things to think about this company. When we look at Home First, so Home First started disbursement but here also 64% of cumulative disbursement has happened in last 4 years, which we need to monitor. And sustenance of asset quality of this loan book is yet to be monitored, but the current seasoning looks to be improving. There is nothing wrong, but it is also need to be monitored. But they are present in a salaried segment. They are present in only 20% of customers don't have credit history. Their lending rate is also same, 13%. So there are certain good parts. The tier 1 and competition and this little bit of seasoning, high growth rate, these are the things which we need to monitor. But it's worth studying deeply. Now, when we look at the risk profiling based on cost of fund, when we look at cost of fund, of course, Canfin because of banking parentage, but after that, best among all is Canfin. But in affordable housing, if you see, Aavas is again best, and it has happened because of the credit rating improvement over last 7 or 8 years. Again here, Aptus is worst placed. So looks like rating agencies and those who are providing the cost of fund, they also realize the risk in the business, and it has highest cost of fund. If we look at the distribution of the sources of cost of fund, a good diversification is always good. Lesser NCDs are good. So again, if we see, Aavas has more diversified borrowing. The part where spread benefit passing to customers, so I also have that analysis done, not well over the years. And if we look at the analysis by yield, cost of fund, and the spread, it looks like Aptus and Home First, they are not passing it. So yeah, high ROE, high ROA, but at what cost? And also take in mind that once your customer becomes matured, he is creating a credit history. You have a threat from bigger banks. And on top of that, if you are overcharging him, not passing the benefit, so surely that is something which will not go well. Whereas a Canfin and Aavas, they have been maintained consistently, but Canfin being salaried, it occurs on a lower spread. Aavas being non-salaried and salaried mix with lesser salaried, it's on the higher spread, but consistent. Now, let us look at the asset quality, the NPAs and all. So when we look at the cumulative net slippages, high growth is there, but you can see Home First is there at the top. Repco story was going on from a long time, but the NPA story was going on. And Canfin is the best. Aavas is among here. Aptus, somehow it is still showing decent numbers. Risk profile, so I have tried to gather the numbers. It might be a little bit here and there because these numbers are not readily available in the investor presentation. I have tried to sum it up. So if you look at these numbers, this is the AUM and this is the write-off. I could collect data for last 5-6 years, wherever it was available. On a 14,000 crore, Aavas, I know we discussed 25, but when I summed up, it came around 30, not much of difference. But on 14,000 crore, 30, Canfin on 31,000 crore, 64. Double AUM, double write-off, both at 0.21%. Repco on 12,000 crore, 318 crores of write-off, worst placed. If you look at Aptus and Home First, almost around 7,000 crore, this is the number. So Home First, you can see the Home First write-off on the AUM is almost double than Aavas and Canfin. Aptus is somewhere in the middle. And also, if you look at the gross NPAs and net NPAs, these two companies they look little worse than Aavas. Aavas looks best place, and Canfin, because of the business model and all, segment and all, it has the lowest number, of course, with a lesser spread and a higher leverage. So high ROE is good, but if you look Canfin, this ROE is being generated on 8 times leverage, whereas these companies on a 3 times leverage we have discussed. And if we look at the high ROA, you have seen the passing the benefit, who is passing the benefit, who is not passing the benefit. So we have to look at all these numbers in totality. So I hope it highlights something about the business models, the difference, the different kind of risks which each company carries, what may happen in future. It gives you an idea of all these companies looking at together. So I will stop here. If questions we will take, else I will pass it to Ankit Bhai for more risk analysis.
So, Saurabh bhai, I think there has been a question by Mukul on the chat box.
Banks and NBFC both are resorting to co-lending, good for NBFCs, good for Indian, more good for managers. Also, PSL entire one. See, my simple reply will be short term, lot of things can happen, but it's a game of strong execution. It's a game of strong culture. Banking, lending, these are all game of culture. If you have companies where credit is not in their culture, short term mein upar niche jayega, but long term mein all that matters. So I will look at longer term view, and I will look at the culture of risk, the culture of technology, rather than, worrying about what is happening here. Ankit bhai, you want to add something? And again, who is playing? It all boils down to granularity. Now in affordable housing itself, it's so obvious that 3 companies are playing in 3 different markets. So it's all about those kind of nuances rather than directly telling ki, NBFC aa jayega, bank aa jayega. But we know ki even if there is a risk, now we know who is more prone to that risk and who is less prone to that risk.
Sure, Saurabh bhai. You have covered it really well. I'll just add one point. See, I see this thing or this opinion floating around in the investing circles a lot of time. कोई भी NBFC को देखते हैं, कोई भी छोटे बिजनेस को देखते हैं in the lending space, people think that कि बड़े बैंक आके खा जाएंगे. अगर ऐसा होता, so why there are so many NBFCs? They are there for a reason. They are there for the same reason. The only main reason is that NBFC serves to a particular section of the society, which a bank cannot, or it is difficult for a bank to reach out to them because of many reasons. Sometimes it could be because of lack of documents, sometimes because of unavailability of branches in those areas. There could be umpteen number of reasons. Only basing your opinion based on the cost of funds of bank is not a right way of looking at the whole investing landscape in the lending space. Of course, bank has an advantage there, and there is no doubt about it. And we have to take that as a risk. That risk is always there, as Saurabh bhai also mentioned about that balance transfer thing. That once the credit comes into the system, once a person who has no credit history starts taking loan from Aavas, Aptus or Home First, then there are banks who will see their credit history and they'll take them to them. But अगर इतना easy होता है ये सब चीज ना, so अभी तक you would have already seen that. And co-lending, many people again see that co-lending means bank has a bigger hand and these guys have a smaller hand. I don't think that is the case. In co-lending, bank uses its strength of lower cost of fund, and NBFC uses its strength of the underwriting, and they team together in that. So it's a win-win for both. It's not that it's taking away business for them, right?
So we will have to look at the cost of fund. NBFCs can also raise fund at a higher rate. What is the distribution of cost of fund, from where they are getting and all? So, banks, housing finance, some of them they get from NHB. So all of that needs to be taken care of. But this is the framework. That is how we have to go about it.
Yeah. So let me just check if any participant has any hands being raised. Okay. No hands being raised. And thanks, Mukul. Great that you got the answer. Okay, so I'll quickly cover the risk and then I'll pass it over to Saurabh bhai for the technical analysis. So risk and valuation actually. Okay, so we'll start with the basic or the main risk, which is not just in housing finance or affordable housing finance, but to lending in particular, right? So reaching growth in unfamiliar areas, imprudent asset liability management, engaging in off-balance sheet lending, concentration risk, over leveraging to drive growth and ratios. All these we have already covered in our previous slides, but we are just again mentioning these points for you to keep a note and have this as a checklist, that any bank or any lending, or for that matter, any housing finance company, if it is like we gave the example of how Aptus is growing their non-housing loan book at a much higher pace than compared to housing, right? Where you see someone like Aavas saying that we are very clear that 70% will remain as housing and 30% will keep it at non-housing. So nothing against Aptus over here. I'm just giving you a perspective that one company is more risk prudent, the other company is more risk taking. Now it's up to you whom you want to back, right? Asset liability management, again, we covered in the previous slides where we mentioned about it is something which is very important, that home finance is an asset where you lend for a long term. You cannot finance this through short-term debt. So a very easy checklist you can do for a home finance company is, how are they funding their lending operations? Is there more and more of bank and long-term finance, or more and more of CP and short-term finance? If it is, so all these companies which you have discussed, they have zero CP exposure, and that is a good thing to have. If they are increasing their CP exposure, that is a thing where we have to be cautious, right?
That has happened because ILFS is there in everybody's memories just 4 years back.
Exactly, and that's a very good point. 2 साल 3 साल जब अच्छी growth आएगी इनके, हो सकता है वो memory will wipe out from the lenders' mind also and from investors' mind also, and they'll again engage in the same problems. So that is where, as a prudent investor, you have to keep these things in mind, right? Similarly, in off-balance sheet lending, you will see Saurabh bhai briefly mentioned about Yes Bank. You go back and see how they had went ahead with their lending operations and all. So these off-balance sheet risks, ये सब भी आपको अगर आप annual reports पढ़ो, so you will get to know, because all these are mentioned in the management discussion and analysis and also in the notes to account. So keep a tab on that, whether they are having more and more exposure on off-balance sheet item or not. As of now, all these guys which we have discussed, they don't have that kind of a, nothing worrisome came up in our understanding. Concentration risk, again, we have discussed. Concentration could be in terms of geography, in terms of customer profile, in terms of ticket size. So those are the risks we have to keep a track on. Over leveraging, again, यहाँ पे तो केस उल्टा है कि ये लोग under leveraged है, but अगर over leverage भी होते तो उसका भी एक अपना risk हो जाता है, right? Where you keep running on a treadmill, कहीं पे भी कुछ पंगा हुआ तो you fall down, right? Now, these are whatever images you are seeing over here are cases of asset liability mismatches, mostly in case of the normal housing finance companies. Just because it has not happened in case of affordable housing finance companies, we should not turn a blind eye to this. We should keep these in mind and check whether the affordable housing companies are consistently prudent in their operation or not, because you never know when the cycle turn, when due to some reason they want to grow fast and they will take all the risky things in their DNA, right? So don't have a blind faith on any company, be it Aavas, be it Aptus, or be it Home First, right? Keep checking whether something like this, because हम लोग क्या कर सकते हैं, नया क्या होगा वो नहीं जानते, but we can learn from history, right? And there are many times, umpteen number of times we have seen that the history repeats in some or the other way. So at least वो history को तो याद रखना चाहिए कि whether they are repeating the same mistakes or not, right? Again, this real estate Ponzi scheme, at the start of the presentation, Saurabh bhai covered it very well. So these are again, and these kind of things happen in the developer loan per se. So as of now, these companies are not into the developer loan, but if they enter into it, that again is a big risk. So all these are why we are highlighting this again and again, so that you have a checklist in front of you. These are the areas where you have to be careful about. And the last, and I think one of my favorite risks for all these affordable housing finance company is this Asmani versus Suleimani. I'll be honest here, these are not my own word. In fact, long ago, maybe about a couple of years back, in one of the interviews, Mr. Sushil Agarwal, the erstwhile MD and CEO of Aavas Financiers, he mentioned these words that majorly ye risk hai affordable housing finance. What is Asmani? Can anybody or do anybody want to make a guess? What is Asmani and what is Suleimani here in terms of risk for affordable housing finance companies? I'll just take a 5-second or 10-second pause just to see if anyone wants to. Okay, looks like Asmani is spread. So Kshitij, you are bang on. So maybe you would have seen some of our old tweets, or maybe you have followed us in the past. Otherwise, God and government is very difficult to, but thank you so much for answering the right answer. So good one, Kshitij. So I'll just expand on it. So what is Asmani? Asmani means, as Kshitij rightly mentioned, it is God sent. Okay? COVID was a God sent thing, right? You cannot plan for these things. These risks cannot be modeled in the Excel sheet. These risks cannot be modeled in the price at which you pay loan. But these risks can be modeled, or can be, the only thing you can do as a housing finance lender is to be more conservative. And that is why you can see all these players have a very strong balance sheet. So वो growth में क्या करेंगे, concentration में क्या होगा, तीनों का अलग-अलग ये है. But at least on one parameter, all these three affordable housing finance companies are same, and that is the quality of book or the quality of balance sheet. And why they have a good quality of balance sheet? Because they know that this Asmani risk, or the risk of any God sent risk, they don't have any जिसको बोलते हैं ना, big daddy in the industry who will make them survive, right? They don't have any government help. They don't have any bank lineage. So they have to resort to their own this thing. So that is one of the risks. As of now, Aavas has faced multiple risks like this, and they have crossed them and come out stronger. In case of Aptus and Home First, of course, COVID was big for them also, but their book size was very small when they faced COVID, and a lot of growth has come post-COVID. So we have to see whether they'll pass on this test or not. The other one is Suleimani, which is government way. So this is again a sector which is very close to government's heart, and they may come up with regulations which is pro citizens and pro people who would be taking these loans, but could be a disadvantage for housing loan players. So again, you cannot model these risks, and you cannot. The only thing you can do is just be aware of this risk. A good, prudent housing finance lender will always be aware of this risk and take so they will always have a balanced approach. They will not take excessive leverage, even though they all know that excessive leverage increases the ROE. High ROE with high growth will give them a higher price to book multiples. Investors will be more attracted towards them, but they will be more responsible because they know that it is not just a sprint, it is a marathon, and they want to be aware and be prepared for these risks. So I hope the risk framework is now clear from our end. Okay, now I'll move to valuation. And as we have maintained always in our Mission Smile webinars, we don't do any complex projections and analysis like that. Not trying to say that those analyses are worthless. Some people find meaning to them and they do it. But we believe back of the envelope calculation, keeping it simple, and having a range in mind rather than a fixed number is more important in understanding valuation. Okay. So as you can see over here, in terms of valuation, you can see on the right hand side where we have mentioned peak, mean, and current. So in case of Aavas, the peak multiple was 8 times and the current multiple is less than 4. So probably in terms of compression of valuation multiples, Aavas has seen a lot of multiple compression, more than 50% compression. Similarly, in case of Canfin also, you will see the multiple compression has happened close to 50% now. But difference between Canfin and Aavas is that in Aavas, nothing bad has happened except the fact that probably last year the valuation was a little on the higher side, and this year they had a exit of their erstwhile CEO and MD. So in that sense, Aavas probably looks much more attractive. And Aptus and Home First, as Saurabh mentioned, even though optically they look at the similar valuation at what Aavas is trading, but there are 2-3 things. They have got recently listed. Their books is also reasonably unseasoned. And we have to see whether they'll continue to do well. Ideally, I should wait for them to perform rather than passing on the verdict so easily. Right?
Just one point, Ankit bhai, we forgot. So anyway, Aptus now, you know, the high growth rate because of the distribution of the loan book. But there is something called CLPP scheme, which came from the government side. And the impact was different in different states. And Gujarat and Maharashtra were the states which got maximum benefit out of CLPP, which where Home First was present. So there is an analysis that who got benefited from CLPP. And Home First is the one which got almost 30-39% of the benefit of CLPP. And Aavas was the one which got least benefit because of being in Rajasthan. So again, growth kahan se aa raha hai, wo growth continue hoga, nahi hoga, is it organic growth? I think we need to look into those things. So because the valuations is being given because of little higher growth, the question is it organic growth or is it sustainable? And I think we need to look at those things also.
Fantastic point, Saurabh. Yeah, I missed that part actually. Thanks for chipping in. So you can see here again, Aavas, we have just shared it from the screener. You can see Aavas is at an all-time low, lower than the valuation at what it used to be traded during the IPO. Even if you go back in 2019, 18 pre-COVID times, वहां से भी lower valuation पे है Aavas. And कुछ गड़बड़ हुआ नहीं है business में. ऐसा नहीं है कि suddenly the growth has completely tapered. Of course, 30%, 25% से 22% है, but still growing at 22%, right? So that is not something which should be so alarming, but it has come down. And given the other quality aspects and the finer, softer aspects which we find in Aavas, when they are available at something like what Home First and Aptus is available at, probably, again, I must confess that both me and Saurabh bhai are biased and invested in Aavas, but probably at this juncture, the risk to reward is higher in case of Aavas compared to Aptus and Home First. But of course, time will tell whether we are right or wrong. Okay. Another thing which we briefly touched upon during the previous slide, in one of the previous slides, is that one mistake which we see most investors make is they will look at the price to book multiple of, say, an Aavas or Aptus or Home First. They will then look at the price to book multiple of Sundaram Finance or, say, a gold loan finance company or a bank, and then they सीधा बोलेंगे करे Aavas और Aptus ये सब तो 4 times price to book है, उधर पे वो 2.5 times price to book है या 3 times price to book. So that is cheap and they are expensive. That is a very wrong way to value or evaluate these kind of companies on valuation. Because I'm not saying कि it is very cheap. मैं ये नहीं बोल रहा हूँ कि ये लोग बहुत cheap है और आप comfortably आप इसमें पैसा बनाओगे. But what I mean to say over here is that all these businesses are very different in the way they grow, in the case of their opportunity size, in the case of the competitive intensity, and in the case of the strength of the business model in terms of how much seasoning has happened in the book. So never compare two different kinds of finance companies just based on the price to book multiple. Of course, you may boil down to price to book multiple and take a call, but just to put things in some perspective, probably a gold finance company at 3 times price to book is more expensive than an affordable housing finance company at 4 times price to book. That is what I would want you to keep in your mind when you analyze different businesses, not just the affordable housing finance business, different businesses in the finance sector, right? So I think this is what we mentioned in the previous slide also. So stark difference in multiples of affordable housing finance companies versus normal housing finance companies. So will affordable housing finance company also go their way? Of course, time will tell, but as we have covered in the presentation till now, there is stark difference in way these two different businesses work. So it will be premature to pass on the verdict that nahi, jaisa HFC mein hua, waisa hi hoga. But it will also be premature to think that, or immature to think that ki wo sab kuch bhi repeat nahi ho sakta. It may happen that some of them can repeat here with some of the players. So we have to be vigilant while we bet on any of these players, right? I think Saurabh bhai, from here you can take Canfin housing finance valuation and then this thing.
Yeah. And again, the idea is to give a perspective on how to, look at these numbers. And if you look when this company used to trade before September 18, so if you look at the growth rate before March 18, the sales growth rate was 23% and above, and your profit growth rate was 49% and above. And then you see the kind of tapering of the growth happened, and the book value also fell. And at the worst of 5% and 7%, still it could grow at PAT at least in double digit, around 15%. And this is where at 2 kind of book value being something like a PSU tag and all, this number matured. This is where the number bottomed out. And the same 2 book values, so again, we talk about technical analysis. And I always say, even in valuation, there is a technical analysis, there is a support of valuation, where you see, given the quality of the book has been decent, again, whenever the stock came around 2 book value, it kept getting support September 18 and then 20 and then recently. But recently what has happened is the growth rate of the business has increased. Let me share my screen, in fact, just 1 second. Yeah. Now, what has happened recently, because when you look at the EPS number, this is the TTM EPS. So see what has happened. EPS was constant in this period, then again EPS grew, again EPS became constant, again EPS is growing. So whenever there is a growth, your usually valuation, if it is low, it expands, and whenever it expands and the growth recedes, again it contracts. That is the thing. If you see recently, last few quarters have been good, and that is why the stock price has done well, and we see it has created a new high. And the management is guiding for 18 to 20% of growth rate. But I don't know, our future, it's so difficult to predict. The good part is, still when you look at PE, when you look at book value, you are still below your mean, and you are not very far from the lifetime bottom. But this is the expectation market is having. If the expectation is met, the price will keep going up. If the expectation doesn't get met, the market will punish. So my suggestion would be, on the fundamental side, keep looking. My sense is, with 15 branches, and until the branch productivity increases and the DSO has been, totally, juiced out, I find it difficult to see them growing beyond 14%, but I could be wrong. So this is how we have to look at it. And in terms of technical analysis, if we look at Canfin, so this is a kind of, you can say it's a multi-year breakout, but I see some problems with this multi-year breakout, where this level has acted as resistance. Heavy sell-offs have happened. It has crossed it, but and it's a monthly chart. But the moment it has crossed, if you see the previous month, again, high volume sell-off happened. And usually when stocks go through a multi-year breakout on high volumes, they go up. This stock, rather than going up, it went down. And if you see, this is called a bearish dozy, which says basically your suppliers, your sellers dominated the buyers on high volume. So looks like the supply is not yet over, but the good part is, again, I am not invested. But if somebody is finding, we have already discussed the business, it looks like one of the decent business, the valuation looks fair, the growth has come back. I also might change my mind because I am also doing this live study along with all of you. But I am a guy who likes to blend fundamental and technical, because my problem with pure fundamental is कि जब गिरता है तो पता नहीं कितना गिरता है, और जब बढ़ता है तो पता नहीं कितना बढ़ता है. When it is doing well, even a 8 book value looks good, and when it falls, even a 2 book value looks bad. So I try to blend more technical both for buy and sell. But if we look technically, this has been a strong resistance which has become a support, because you see so many times here also since 2022. So even if I have to invest or I have to trade, this zone is a good zone where maybe ye aapka 700 ka bhav hai and this is 738. With a 5-6% stop loss, if one wants to take a bet, one can take, but I am not liking this structure, what is getting formed here. So that is how I will describe it. So one, you have to look for this line, then your RSI needs to be above 50 for any kind of bullish move. After a long time, slowly it looks like it might outperform Nifty. If you see, this has been underperforming Nifty for bulk of the time. After I think 2021 was one attempt which failed, and that time the growth was not there. Now you have a good 18-20% growth rate. So it's all it'll boil down to growth rate. वो किसी के हाथ में नहीं है. अगर वो deliver करके दिखा देंगे, सब move हो जाएगा, नहीं दिखाएंगे नहीं होगा. I don't know how it will play out, but my job is to safeguard my risk if things don't work as per plan in case I buy. So I'm just giving you a framework that this will act as a good risk reward level to play for somebody who wants to play. If we look at Aavas charts is very, very different from Canfin. Canfin has created a lifetime high. Aavas has created a lifetime low. Now, if you look at the chart, this is where your book value topped, your high growth rate topped, and it has been a down cycle. This is a weekly chart. 13 week and 30 week. आप 30 की जगह 35 ले लो, 40 ले लो, it doesn't matter. वो point थोड़ा सा ऊपर नीचे हो जाएगा. So people keep asking which is optimum. There is nothing called optimum. Optimum differs chart by chart. ज़्यादा difference नहीं होता. You need to take a short-term time frame and long-term time frame. 13 week is 65-day moving average. 30 week is almost like 150-day moving average. आप 200-day भी लोगे तो ज़्यादा असर नहीं पड़ेगा. The important concept is what is price trading with respect to these lines, and how these lines are trading with respect to each other. When stocks are in uptrend, your close price is always above your 13, your 13 is above your 30. And whenever corrections happen, if the stock is in high momentum, you might get first level support here. When the stocks are in little lesser momentum, like started moving sideways, then ये जो 200 day का 1 year moving average कहते हैं, आप 30 पे भी ले लो, that comes to rescue and that comes to support. And this is how this stock kept doing. And then a cross down happened. So anyway, if you see, this was kind of top because यहाँ पे बार-बार supply आ रहा था, it is not able to cross. And then you see again a bearish dozy, and then it starts going down. And ये जो level cross हुआ था, it got beaten, it went below it. This was the first warning signal. And then your moving average cross down happened. Once the moving average cross down has happened, the stock went into a downtrend. Almost we have spent 1.5 years downtrend, and continuously now your 13-week moving average is below 30. वो बीच में try कर रहा है, but अभी तक ये cross नहीं हुआ है, और यहाँ पे इसी zone में resistance भी मिल रहा है. फिर से try कर रहा है, फिर से resistance मिल रहा है, फिर से try कर रहा है. If you see right now also, it has not crossed. I mean, you can never perfect timing happens only on Twitter. I mean, even if you look at Mark Minervini, he says, I'm ready to let the first 50% move go. But then he's betting on things which can go maybe 200% up, or he's betting on how to make 10% in 7 days or what. But the fact is still the momentum is missing. Still this line is acting as a resistance. Still, आप डेली चार्ट ले लो, मंथली चार्ट ले लो, वीकली चार्ट ले लो, जब तक RSI 50 के ऊपर नहीं रहता है, परफेक्ट बुल रन नहीं मिलता है. And those who are in scientific investing, you'll know n number of times I have given example. Again, you take the example. जब भी ये ऊपर जाता था 50 RSI के around resistance. जब भी ऊपर जाता है 50 RSI के around resistance. Now again we are at this 50 level. I don't know if this time it will get crossed or again it will act as resistance. But if you want to expect a good bull run, this has to go above 50. This blue line has to cross black line. The close price has to be above the blue line. The blue line has to be above the black line. So when all of that will happen and earning support will get, again good sentiment will come, then again a bull run will come. So that is why I told I have just purchased my first tranche. The reason being I'm a fundamental guy also, I'm a technical guy also. After all that correction for this kind of book, and I never know what is the right price. So again, I give example because some of my videos are in public domain. So for me, the price band of Laurus was 1300 to 800. I don't know कि वो 1300 पे रुकेगा या 800 पे रुकेगा या उससे भी नीचे जाएगा. Because valuation is never a perfect number. It depends on a lot of things. So this is how I decide to buy in bands by creating support level कि यहाँ पे लूंगा, तो maybe मेरा mean price 1000 हो जाएगा. So same way I will, if I have to buy, I will buy in 3-4 tranches. And this is where I have executed my first tranche. Now, either it will break this or it will go below, or it will get into a momentum and things will be good. ऊपर जाता है अगर मैं और बाई नहीं भी कर पाता हूं तो जो बाई किया वो चलता रहेगा, or else as the signals improve, as it starts going above this, as again the crossover happens, which you call your typical stage 2, then you can increase your position gradually. This is how I do. If it is going to break below it, then I have two options. Either I 6 महीने पैसा लगा के, I think I have purchased around 1319, 6 महीने पैसा लगा के 5% का लॉस लेके निकल जाओ if you respect technicals, or you decide no, it's a good company, I think it's a good company accumulating whatever cycle going on, I will buy in tranches, and then I keep buying in tranches, averaging down, which is not popular nowadays. I do both. I do average up also, I do average down also, but I do average down where I have conviction. Lending businesses I find little tricky. I may not do average down. I had some bad experiences, however great the company is. So I would expect it will not break this level. And once the consolidation happens, momentum begins. Maybe it will take some more time to consolidate. Maybe the book value might become little more cheaper, or it might charts change, 3 months chart change. It might fly off. But this is how I'll monitor, and I've given the triggers how I look at it. And one indication, if you see, this is how it was underperforming Nifty. So everything is higher high, higher low. So you look at the relative strength with respect to Nifty. If you see this low is higher than this. It is yet to form in full flow. We'll monitor how it happens. I think there is no hurry as such. I think in next 2-3 months, this chart will develop, which will give more idea ki kya ho raha hai. Fundamentally, we have studied. So we need to monitor, go through the con and see how it will happen. This is Home First chart, because I found Home First also reading. I think there are certain good elements. It needs to be studied in detail, though the risks also we have highlighted. But if you see Home First, most of the times the Home First has traded in. आप यहाँ से यहाँ की हिस्ट्री देखोगे तो सबसे ज्यादा जो रेजिस्टेंस आया है इसी जोन में आया है. It faced resistance, and resistance is a perfect line. It could be a zone also or 5%. Here, then again यहाँ पे जा रहा था, फिर से यहाँ धीरे कर रहा है. The thing is, all this move is happening without any good volume. I removed this part also. I just looked at this also. So it is not happening with a great volume. So this stock is also under consolidation. But given the fundamentals are, given the valuations are, we have seen, I mean, it's very difficult for companies to grow at, 40% kind of growth rate, and the CLSS and the threat from the bigger banks. I will not do anything. I will study this business maybe, but I will not do anything further. So this was on the technical of all the companies. Now summarizing everything, because we almost spent 4 hours. And it's a learning for me while studying the home finance sector. First time I'm studying in detail. Look at the drivers, not the outcome. Oh, book value, ROE, RE, pura discussion isi pe hota hai. The focus should be behind that. So I believe we have given enough hints, enough levers, enough ways to dissect the business and see what are the drivers and who looks good or who looks bad. The problem is sometimes people who had right sense, they might look idiots. And in lending world, you might look like the biggest idiot. Somebody who told Yes Bank is bad, he looked idiot for 3 years, 4 years. And even today's scenario, some people are there, who are telling this company is good or bad. They might look idiot, but you have to follow your process. That is what we can do. So look at the drivers and not the outcome. Once you have understanding of the driver, then you connect with outcome. And I believe we have given the case studies how to do. Valuations matter. We have seen how it has happened, and even now it matters. I don't find these valuations cheap. I find these valuations maybe fair, but these kind of businesses, it's a little difficult, but I find it somewhere in the fair range, not exactly in the cheap range, which is a screaming buy. Focus on the drivers. What are the drivers? The credit profile of lending segment, the yield, difference of yield between various companies, difference between cost of fund of various companies, the spread, the direction of the spread, salaried versus non-salaried distribution, concentration of portfolio by geography, by business segment, ability to expand beyond a certain state, technological ability to enable technology and scale the business, history of slippages, history of asset liability mismatch, quality of the growth. These are the things where we have to focus. And once we have understanding, then look at book value, ROA, ROE. Opportunity size exists because it's still a big market, the under penetration and all. I think Ankit Bhai showed in terms of the number, but there are no big entry barriers. The entry barriers are created over a period of time by execution. And the more bigger you become, the more stronger you become, the better the credit rating profile is, the lesser your cost of fund will be, the lesser you will be able to ask your customer. And it's a wheel which Ankit Bhai showed, which will keep going on, but still valuations matter. And banks are risk because it's a treadmill to keep finding the non-credit borrower or hold him until the credit profile of the borrower develops enough to excite the big lender. The other thing which is happening is, if you see 5 years back, a lot of these guys who are non-salaried, everybody dealt in cash. पूरा धंधा कैश पे हो रहा था. आप उनका क्रेडिट प्रोफाइल नहीं गेज कर सकते थे. But look what is happening with UPI, and why I'm highlighting, because I take certain courses on digital side of what is happening in India. What UPI is doing is, it is giving the initial base to create an alternate credit model, because the guys who are transacting in cash, these guys are transacting on UPI. So if you can monitor a chai wala's 3 years of UPI transaction, you can have some sense of how he is earning, how much he is earning, where he is spending, is he lying. So don't get surprised if 2-3 years down the line, the kind of models, credit models which get developed might be very different from historical model based on totally new data, which could again become a threat to some of these companies because they have built that skill set of doing the credit assessment despite of not having a credit profile. So I think we need to be cognizant of these kind of risks which are not very apparent. Nobody can do it and predict it. It has to be tracked, quarter over quarter result, con call, all of that. We will be able to do it. In terms of companies, in affordable, Aavas looks best in terms of history of execution, all the things. But Home First is also interesting with mixed shades, early adopter of technology, focused on better credit profile at a higher spread, but not passing the benefit to the customer, especially when it is in salaried and it looks more closer to banks in terms of threat of the banks and no deep distribution. It could get threatened by big lenders. Aptus looks risky. The way the book is growing, the distribution of book, yield, everything, all of these. Canfin has been boring and simple, always look boring and simple. Growth has been cyclic, faced with management changes, the PSU tag, and higher competition from the big lenders. And growth is slowly coming down. Let's accept this reality. So how do we factor into valuation? The PE, the book value was 8, the growth rate was 40%. Now the book value is 3.8, the book value is 20%. I find we are coming to the fair zone. I mean, I am also not great at valuing, banks and lending institutions. And that is why I said I try to mix with technicals. But it's not like a mouth-watering valuation. But I think after all this correction, we might be coming to the fair range. So this is how I will summarize it. Thank you. Thanks for being patient, listening. Ankit Bhai, up to you, and we can open for questions.
Well, thank you so much, Saurabh bhai. You covered it really well, specifically the technical analysis part, where I have no understanding. I think someone asked to share that.
Yeah,
this
sins
one.
of home finance. Yeah,
So,
I will just
so we
put
can
that
just
slide.
share that. Yeah, great. So anyone has any question, you can ask us. I think we have covered fair bit and we have taken a lot of questions. So even if you don't have any questions, we won't mind. But even if you have any questions after this, please feel free to ask us now. Or later on also, if you have any question, do share with us on our, you can even, if you found this webinar, we both had to work really hard on making this PPT and presenting today. And so if you really enjoyed the webinar, we would also request you to share about it on Twitter and on other social media so that more and more people can get to know about it. And apart from this, any questions, anytime you can write to us on WhatsApp, on email, we will get back to you with our answers. So we don't share the presentation. I think somebody asked this question, Bharvi. We don't share the presentation as a rule. So anyways, the recording will be there. You can look at the presentation umpteen number of times. If you are a Mission Smile and a scientific investing member, then to आपके पास हमेशा रहेगा ये presentation. Okay. So with this, Saurabh bhai, any closing remarks? Shall we?
No, we are good. I think people are there from 4 hours. I mean, I really, give credit to them. So thanks for being there and listening.
Great. So thank you so much, everyone. Specifically people who have been here since the last 4 hours. And you are the ones who give us the motivation to keep trying hard, study more, and come up with more and more better analysis. Thank you so much, everyone. Have a nice weekend. And do get back to us if you have any further questions. Thank you, Saurabh bhai. Thank you, everyone. Bye.
Thank you, everyone. Take care. Bye-bye.